Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom Mackenzie in London, and here are your top stories. Calling on China, the US says Russia asked Beijing for military aid in Ukraine. White House advisor Jake Sullivan meets Xi Jinping's top diplomat today in Rome. Negotiators from Russia and Ukraine are set to hold further talks today after a weekend where Moscow increased its aerial attacks on areas closer to Ukraine's border with Poland. Plus, panic selling grips Chinese tech stocks as concerns pile up. New COVID lockdowns are announced in the tech hub of Shenzhen and Jilin province. Okay, let's take a look at the futures then. European futures pointing to gains despite the pressure, the bloodletting that you're seeing in Chinese tech, particularly in Hong Kong, that you're seeing very much, and we'll get to that. That would be the top story for us in any other normal day, but of course it is Ukraine and the modest optimism around whether or not the needle will move on diplomacy that remains in focus for us. The FTSE 100 is flat. Again, the futures are pointing to gains at one point of more than 1%. Stateside futures pointing up as well. Gains of just 0.1% in the UK. The FTSE 100 currently down year to date by about 3%, so outperforming what we're seeing across the broader European space, and of course the S&P remaining contraction down 11-12%. A similar picture again for the broader European space, but the FTSE 100 down around 3% year to date. The Spanish IBEX gaining 1%, the CAC Cajon up 0.6% or 38 points. Let's switch it on then, see how things are playing out cross asset. We also, of course, continue to look at the inflationary effects of the war in Ukraine and how that's going to be weighed up by the Fed. Of course, the markets are pricing in almost certainty of a 25 basis point hike come Wednesday. The future stateside pointed gains of 0.6%. And here is where the pressure is being felt most acutely now. This is not linked specifically to the Ukraine story. It is part of a factor, the concerns around the outreach, it seems, from Moscow to China for military support. But more broadly, it's about regulatory concerns, the delisting risk in the US, and you're seeing losses of more than 11% across those Chinese big tech names currently. And we'll look at the chart that illustrates just how that compares to US tech shortly. The ruble remains under pressure at 6%. In fact, you're seeing gains. This is 6% gains for the dollar versus ruble. So losses again of the ruble more than 6% as you look at potential moves around diplomacy there. And Brent currently at $108 a barrel, lower by more than 3% on Brent, $108 per barrel. Let's switch it then and have a look at the terminal that just shows what is happening. We're going to get back to all things, of course, Ukraine and the war there, the implications, the humanitarian crisis, and then, of course, how that plays in to the markets. But in terms of what is happening, just as a snapshot, for Chinese technology, it is pronounced, indeed, the sell-off that we're seeing. And just to this point, the losses that you're seeing across the tech sector, the Chinese tech sector, bringing it down in terms of that valuation below the valuation of Amazon. So the entire Chinese tech listed in Hong Kong, valuation is now lower than that single US company, which is not the most valuable US tech company, by the way, just to illustrate the pain that is being felt across technology in China. Panic selling, as our Bloomberg team have described it. Okay, let's get back to what is happening then on the ground. The economic and diplomatic pressures on Moscow appear to be growing. Russia's finance minister says it's lost access to almost half of its reserves. A US official says Moscow has asked Beijing for military help. America and China will hold their first high-level in-person talks since Russia's invasion of Ukraine. The White House is also warning Beijing not to help Moscow evade sanctions.
We will not stand by and allow any country to compensate Russia for its losses. There will absolutely be consequences for large-scale sanctions evasion efforts or support to Russia to backfill them. We will not allow that to go forward and allow there to be a lifeline to Russia from these economic sanctions from any country anywhere in the world.
Let's bring in Bloomberg's Maria Tadeo then. Maria, what can we expect from these talks? They'll be held in private, is what we're hearing.
Yes, Tom, and it's day 19th, of course, of this war. Every day we think about the Ukrainian people, this war that's now stretching into week 3. And you see there's 2 important meetings that are happening in parallel today. One, of course, as you alluded to, there is that American delegation meeting with the Chinese delegation in Rome today. This is happening just a few hours after, of course, that story broke that Russia had indeed turned to China for military assistance. Now, Tom, we've talked about this on the show for weeks now. This is a war that's becoming very complicated to fight on the ground for Russia. The longer this war goes on, the more expensive it becomes for the Kremlin. And of course, we know the economy is under huge pressure already. Now, 2 things we're going to be paying attention to from this meeting. One, of course, is that a request for assistance does not mean that China has to grant it or, in fact, has an interest in granting it. And then 2 is that warning from the United States saying any country that helps Russia circumvent sanctions will face repercussions. The other thing I would point to, Tom, it's also happening today, will be that video conference between the Ukrainian delegation and the Russian delegation. And now we've known that for 3 weeks they've been on the phone, they've met via conference, they've also met in person. But the reality is we haven't seen anything so far that looks like a ceasefire. The Ukrainians, however, on Saturday said there had been a change in tone from the Russians. This is not just about ultimatums, but they're now beginning to listen. So that could point perhaps to a shift in these talks.
Okay, Bloomberg's Maria today on the ground with the latest leading up to that important meeting between the US, of course, and China in Rome. Joining us now is Kieran Ganesh, multi-asset strategist at UBS Global Wealth Management. Kieran, good morning. Thank you for joining us.
Morning.
In the studio. It's your base case, and it's the team at UBS Wealth Management base case, that you get a ceasefire come the summer with all of the caveats around that. And let's hope that happens, and let's hope it happens in a quicker time frame. But if it doesn't, what is the here and now, the positioning? How are you building defensiveness into your portfolio?
Yeah, exactly. So I think that the outlook has really been flattened and broadened if we think about the potential outcomes we get to by the end of the year. So what we've been thinking about is, well, how do you protect against that left tail risk? So there we're building up exposure to things like healthcare, to the US dollar, and also thinking about how we can incorporate options into our strategies to try and mitigate our downside risk, while still remaining invested and thinking where are the upside opportunities as well. So in things like cybersecurity, which we think is going to be, a potential winner in the longer term as countries start to refocus more on security as a result of this crisis.
Given the volatility we've seen over the last few weeks, there's a temptation to take cash and put it on the table and wait for some clarity. Is that advice that you'd be giving to your clients at this point? Put some cash on the sidelines, wait for that clarity, and then deploy it?
It really depends on the quantity. So we think it is really important for people to be thinking about, okay, well, what are my spending needs over the next 2 or 3 years, and then have that held in cash and short-term bonds, because this isn't a market where you want to be forced to be selling assets in order to meet your regular spending needs. But at the same time, we think that there's a general longer-term strategy is much better to be staying invested. Historically, geopolitical crises have tended not to have a long-lived negative impact on markets, and we're starting to see some positive signs in terms of negotiations here as well. So we think it is better to stay invested and just put some hedges into your portfolio to manage that volatility in the near term.
What is the level of concern between you and your team about the credit risks at this point, and how the oil price and commodity price feeds into that? The pressure on some of the corporates and how they're having to work through their balance sheets on the back of these record levels that we're seeing in commodity prices?
Well, I think it depends on exactly what level we get to and the volatility. So I think if we're around 108 on Brent today, I think that's a pretty manageable level. When we were getting through 120 last week, that was starting to be a bit more concerning in terms of the impact on the economy and on credit. And then the additional concern would be the level of volatility. Again, it has been relatively calm the last few days, and we hope for that to continue. If we do see outsized volatility, then that raises concerns that you might see things like margin calls and challenges at individual companies because they've put in hedges and they can't deal with that volatility. So for now, we haven't seen too much risk in the credit space, but if we see higher prices and more volatile prices, then that would be a greater concern.
And markets pricing in 6 25 basis point hikes or thereabouts this year from the Fed. Does that align with your thinking? Is that appropriate at this point?
We think that's about right. We've had this big about turn in markets because we had, prior to the crisis, the 6 to 7 rate hikes getting priced, and then that obviously dropped out of the market as people were thinking, the central banks are going to do something about this. I think now there's a realization that with inflation where it is, they can't do much about it, so they're going to have to hike as they plan. So we think that sort of 6 to 7 hikes over the next 12 months is realistic for the Fed and for the Bank of England, and we're looking for the ECB to hike before the end of the year. So back to where we were before, really.
What is propelling the US dollar? What is leading that support for the US dollar? Is it the safe haven move, or is it the pricing in of tighter policy?
It's both, and I think that's part of why we see it as attractive in portfolios at the moment. It's undoubtedly on the higher valued side of the currencies, but we think it is still attractive at the moment because it's got a combination of potential income ahead and hedging qualities as relates to the war in Ukraine.
Just on that point, then, when does it start to feel overly priced for the dollar? What's the level you're looking at where you'd say, okay, that's enough?
Yeah, so the line we're drawing is around 108 against the euro, so it's not too much lower than where we are today. So I think if we're getting below 108, plus maybe we see some signs of the crisis easing, then we think that it will be time to be building up longer-term positions in the euro rather than the dollar.
Okay, Kieran, great stuff. And Kieran's going to be staying with us as well after the break. Kieran Ganesh, multi-asset strategist at UBS Global Wealth Management. In the next couple of minutes, we'll be looking at China and his views, and the UBS team's views on China as that country locks down the tech hub. This is remarkable, of Shenzhen, as major COVID outbreak spreads. That is a city of 17.5 million people. The Hang Seng Tech Index plummets, of course, multiple factors playing into that. We've got more on all of that next, and clearing some calls from Kieran. Stay with us. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Welcome back to the Open. We are 12 minutes into your European trading day. You're seeing gains of around 0.8%, 0.9% across the broader European stock 600. Future stateside also pointing to gains of between 0.6 on the Nasdaq and 0.9 on the broader S&P E-mini futures. But the biggest moves are being felt certainly in China, particularly Hong Kong. A redhead crossing the terminal just a couple of minutes ago. The Hang Seng China stock gauge sinking 7.2%. That is the most since November 2008. Okay, a relentless sell-off that we're seeing in Chinese technology. It continues, it's unabated, driving losses more broadly across Hong Kong and China stocks. Let's get more then on the ground with Bloomberg's Sophia Horta-Acosta, who is always in the weeds on this stuff. Sophia, a massive sell-off then in Chinese tech stocks. Just break down what is driving this.
It's been completely brutal. I mean, we already saw some of this last week. The Golden Dragon Index of US-listed Chinese tech stocks falling 10% on 2 consecutive days. I mean, 20% in 2 days, that hasn't happened in the 22 years that the index has been in existence. And we're seeing that follow through to Hong Kong. Now, there's multiple factors at play. It's the financial decoupling story that's really making investors nervous. Owning China in your portfolios is becoming increasingly risky as Xi Jinping moves closer with his alliance with Putin. And the concern there is that China is really risking sanctions, and you saw the impact that that had on Russia. While the probability of that is still obviously extremely low, I mean, portfolio managers holding Russia went, the value of their holdings went to zero almost overnight. So there's that extreme concern as well. We had news that Shenzhen, a big tech hub in China just across the border from Hong Kong, is locking down its 17 million residents for a week because of COVID. Again, concerns that COVID will spread in China and really complicate the economic recovery this year. Also, more regulatory concerns. The Wall Street Journal reporting that WeChat, which is owned by Tencent, one of China's biggest companies, is facing a record fine because the PBOC said it violated money laundering rules. And then, Tom, you have potential delisting concerns in the US, where the SEC is really pushing ahead with its auditing concerns that Chinese companies are unwilling to show their books. So when you kind of combine all of this, the bad news just keeps piling up. And Tom, I would say tomorrow may be a key, another key day for China, because we could get an interest rate cut. No economist was predicting that before this weekend, and COVID zero is looking like an increasingly difficult policy for China. Can you get 5.5% economic growth? Can you hit that target without stimulating the economy? Economists are saying no, and the PBOC will have to do a lot more than it has done to really support growth. Tom.
Yeah, and to what extent, Sophia, thank you. Sophia Horta-Acosta joining us out of Hong Kong, of course, to what extent that stimulus can actually support, given all of those headwinds for the Chinese economy and Chinese companies as well. Remarkable. Not a huge surprise that Shenzhen's being locked down, but it is remarkable. 17.5 million people, the Silicon Valley or more of China there. Okay, let's bring back Kieran Ganesh, multi-asset strategist at UBS Global Wealth Management. And Kieran, interestingly, when you look at China, and you're weighing it up against the exposure you want to be getting globally, it still remains one of your preferred regions, at least within the Asian space. So just unpack the thinking that underscores that and why you haven't second-guessed that, or have you?
Well, I think it's important to think about the scale and the global context as well. So if you're looking at a globally diversified portfolio of equities, this is a 3 to 4% allocation to China in a global scale. When we look within the Asia markets, we think that China is actually relatively well positioned going forward from here. So firstly, relatively cheap, obviously underperformed quite significantly in recent days and over the course of the past year. And we talked about that 5.5% growth target, and you have to think about, well, how are they going to achieve that? And they've got a lot staked on that. So as we get into the second half of the year, are they going to need to put in extra fiscal and monetary stimulus at a time when it's getting withdrawn in a lot of other markets? So we think that speaks in favor of the market. And we're focusing on some of the potential beneficiaries of that stimulus, so thinking about things like metals and mining, construction materials, infrastructure, which could benefit from the government trying to get up to that growth target against a backdrop which is clearly difficult with the COVID zero policy.
There's an expectation that monetary and that fiscal support can offset some of those regulatory headwinds then?
Certainly, if you look across the different sectors, it's going to be beneficial for some. The regulatory headwinds are clearly hurting tech, and they may continue to. But we think that if you look at some of those more cyclical areas of the market, they might benefit from the government trying to bring the rates of growth up. So if we focus on those areas, we think that it is a relatively attractive market in the region.
And you steer clear of Chinese tech at this point?
With tech, we're keeping a broadly neutral stance because, again, it is pretty cheap. You heard the stat earlier that you can buy the entire Chinese sector for the price of Amazon, so it is undoubtedly cheap. I guess the question is, when are these regulatory headwinds, both from China and from the US, going to ease? And maybe that takes some calming down in the geopolitical tensions for investors to feel confident that that space is going to ease.
And is that support that you're expecting to see through China coming through in the months and quarters ahead? Is there a flow out as well to the kind of broader EM space or the Asian region? And there's some beneficiaries within that region on the back of that additional support?
Well, you'll see some support flowing into other countries. I mean, I think if we look within EM, we've actually seen pretty good performance so far this year from places like LATAM, which have benefited from the higher commodity prices. And if we start to see that stimulus supporting things like infrastructure and building materials, that could also help support the commodity prices, things like the Australian dollar, which is another currency that we've been looking at recently. So there will be some flow through, but we're looking at the primary beneficiaries within China.
And moving it back to Europe, and this remarkable switch that we've seen in terms of the focus away from energy dependence on Russia and building out the capacity here in Europe to sustain our own energy complex. How and what is the theme around investing in it? Is it too early, or do you have a roadmap already in place to be able to invest around that transition?
Well, I think we do have the roadmap, and it comes back to what I was saying earlier about the increased focus on security. So that spans from cybersecurity to energy security, so things like green tech, renewables, electric vehicles, that whole infrastructure space. But it also spans, well beyond that into national security as well. So this whole space, food security, is going to be a big theme coming out of this as countries and companies shift their focus away from efficiency of supply chains and more towards security. The pandemic started that, and I think that this is going to add to that focus.
Kieran, do we avoid a recession at this point?
Commodity prices are the thing to look at, and that's what we've seen focusing on. It's easy to get lost in lots and lots of headlines, but I think if commodity prices can stay below $120 per barrel on Brent, we think we probably can avoid recession. If we start to stay above that level for an extended period, then we think we are going to see recession in Europe.
Okay, you talked about in the earlier section about how to build some defensiveness into the portfolio. What about hedging?
Yeah, so I talked about the US dollar, we talked about health tech. We're looking at, it's kind of expensive to buy sort of put options at the moment because of the general price of the VIX index. So, we think the diversification strategy is the best way to hedge. We've seen the US 10 years drop significantly on the crisis, so having that in the context of a portfolio can help hedge. We would wait for volatility to come down before adding really sort of explicit hedges into portfolios at the moment.
Okay, great stuff, great insights. Thank you for coming on set, Kieran Ganesh, and joining us this Monday morning. Kieran Ganesh, multi-asset strategist at UBS Global Wealth Management, and there is much more coming up on these markets. Currently, the European stock 600 gaining 0.7%. Future stateside always also in the green. Stay with us. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 23 minutes into your European trading day. Gains of around 0.7% broadly. The index that really stands out is the DAX over in Germany, up more than 2%. The FTSE 100, a more muted set of gains, up 0.2%. So some decent moves here across the European space. The diplomacy around Russia and Ukraine seems to be moving at least at the edges. There's a little bit of optimism around that. And of course, you have the important meeting between the National Security Advisor of the US and Yang Jiechi, Xi Jinping's top diplomat in Rome, later today. Let's check in on some of the individual movers then. Around that diplomacy, you've got the Austrian-listed bank Raiffeisen gaining. Again, the exposure to Russia there and the fact that possibly some level of diplomacy is starting to come to the fore, gaining 5% or so, 5%, about 60 basis points or so. In terms of process, the exposure there to Chinese tech, particularly Tencent, leading to pressure down almost 8%. You're seeing just Chinese tech absolutely hammered. And just to reiterate, Shenzhen, the beating heart of China's tech sector, has been closed down for a week, a lockdown there of 17.5 million people. The headquarters of Shenzhen is in that city. Volkswagen gaining on the back of a decent set of results, getting almost 8%, as you can see, 10 points for Volkswagen. And you had RBC Capital coming out saying that these were surprisingly optimistic. The outlook from Volkswagen, surprisingly optimistic for 2022, with very solid 2021 results. That's the line, or the take from RBC Capital. So a couple of individual stock movers that we are just bringing to your attention today. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. EDF has forecast a multi-billion euro hit to full-year earnings from regulatory measures and lower production. The French utility had already flagged a squeeze this year, with its nuclear power output dropping to the lowest in more than 30 years due to repairs and maintenance. EDF says the French government's decision to force it to sell more power at a steep discount to shield consumers from soaring prices will hit earnings this year by about 10.2 billion euros. Bloomberg has learned that China is planning a massive increase in coal mining. The nation's top economic planning body told officials from major mining regions last week that it wants to boost domestic production capacity by about 300 million tons. It also plans to build a 620 million ton stockpile of the fuel split between government, miners and users. China produced over 4 billion tons of coal last year. That's the Bloomberg Business Flash. Tom.
Laura, thank you very much indeed. Okay, coming up, a war is accelerating Russia's shift towards an isolated internet. As the country's troops poured across the Ukraine border, the Russian government began its internet shutdown. We'll bring you the story next. The markets across Europe, gains of 0.5%. Stay with us. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modelizaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 30 minutes into your European trading day, and here are your top stories. Calling on China. The US says Russia asked Beijing for military aid in Ukraine. White House advisor Jake Sullivan meets Xi Jinping's top diplomat today, that is in Rome. Negotiators from Russia and Ukraine are set to hold further talks today after a weekend where Moscow increased its aerial attacks on areas closer to Ukraine's border with Poland. Plus, panic selling grips Chinese tech stocks as concerns pile up. New COVID lockdowns are announced in the tech hub of Shenzhen, but also in Jilin province. Okay, let's check in then on these markets. Modest gains that you're seeing across the benchmark, the European stocks at 600, and we'll break it down index by index. The FTSE 100 is now range bound. Basic Resources is a drag there for that index, which remains lower by about 3% year to date and has outperformed European stocks and US stocks. But today, it's Basic Resources as a drag on the FTSE 100. The DAX is gaining 1.7%. Autos near the top of the list the last time I looked in terms of sectors, and certainly the results and the bullishness, in fact, from the outlook from VW is part of the mix for DAX. Again, the broader European stock 600, you're seeing gains of 0.5%. The mood music around diplomacy on Ukraine and Russia started to look a little bit more positive over the weekend. We talked about those talks that are going to be happening later today, and then, of course, the meeting between the Chinese and the Americans, and see if anything comes of that as well. Oil is off today, and that is playing into what's happening across the commodity space, of course. Autos and parts gaining 3.5%, followed by insurance, banks, and construction materials. Those are the top four sectors as we speak in terms of the picture. Basic Resources down 1.5%, followed by healthcare. Energy also lower by 5 cents. 108 was the last time I looked on Brent. Let's get back then to the picture around the geopolitics and the war in Ukraine and what it means around cybersecurity and technology. Russia's invasion of Ukraine has sparked a turning point for Putin's long-prepared break from the Western internet. Social platforms like Facebook and Twitter, they've been blocked by the Russian government, while Apple, Dell and Microsoft are curtailing their operations in the country. There's concern that the current conflict will inspire Russia to turn more closely to a Chinese model to insulate it from the West. Alexander Litriv, CEO of Solar Labs, joins us now. It's a company that makes software to circumvent online censorship, and Alexander fled Russia after working with the opposition leader Navalny and has deep insight into the cyberspace picture, but also the picture around human rights and censorship in Russia. Alexander, thank you for joining us. What is the situation on the ground now in Russia? How has the censorship changed of the media space, of the access to information, just in the last 3 weeks of this war?
Yeah, thanks, Tom. So basically, we have tremendous changes in the Russian censorship. We see that Russian government now blocking resources which they didn't block before. For example, today's morning, Instagram became unavailable for all all the Russian citizens, and none of them are able to access it somehow except VPN services. We also see that massive restrictions are imposed to the social networks other than Instagram. So, for example, Twitter or Facebook. Those social networks not only blocked in Russia, but also recognized as a terrorist and extremist communities. And basically, if you are a signed user there and you have an account on Facebook or Instagram, under the Russian law, Russian prosecution may recognize you as a terrorist or extremist, which make it danger for the people to use those social networks in Russia, even through the VPN service.
Okay, so what are those tools? I mean, you mentioned the VPN service. Have you seen an uptick in demand for VPNs, or are the risks just too great, given what you've just outlined there?
Yeah, we see the great use for VPN services there. We see that people are massively looking for tools to bypass those restrictions, despite the fact that the regular VPN services are under attack. And for example, such VPN services as NordVPN or ExpressVPN are not accessible in Russia. We see that, for example, our VPN services, which is based on blockchain, the VPN technology Sentinel, is fully accessible in Russia, and it's much more complicated to get it banned. So government does not possess enough resources to achieve that. And we see that demand for this decentralized VPN services is growing, and we see that, in generally speaking, blockchain technologies are now trending in Russia. And since people are getting banned from Visa and MasterCard, they still have to transfer money throughout the border to other countries, to their relatives and so on. They're using blockchain technologies for that, Bitcoin and so on. And we see same use for blockchain to provide more free access to the internet.
Alexander, we talked about the fact that Russia may be moving more towards a kind of Chinese style or a Chinese form of the internet and the way that they kind of put in place restrictions. But it took China years, decades arguably, to build out the great firewall that they have there. Is the technology now available, potent enough to kind of break through these restrictions? Just building on your last answer, is it possible for Russia in a short space of time to build those kind of restrictions in place, or can you get around them easily?
Well, it will be possible, but it will be much worse than in China, because they will have some additional consequences which they haven't predicted and they haven't prepared for it. So, for example, if they banning, let's say, one web service at the moment, trying to make it inaccessible for all of the Russians, they might ban accidentally like 10 another web services which shouldn't be banned, and that's the only thing.
Listen, I want to draw on your experience working with the opposition in Russia. I know you're based in Estonia now. You've had to flee essentially the country. You've worked with Navalny, of course, the figurehead of the opposition movement, largely in Russia. What is your sense, Alexander, of the scale, the scope of opposition in Russia to this war?
Well, generally speaking, I personally don't know any people who are in favor in the war with Ukraine, and I do not personally know any people who are like cherishing it or telling that this is something which Russia should do. And everyone is condemning war with Ukraine. And talking of the opposition, we gathering lots of people on rallies in Moscow, St. Petersburg, and many other cities in Russia. People are taking it to the streets and telling the government basically that they are not like what's happening. They are against the war and they don't want it. But well, we can consider those people also as victims of the Putin's regime, because they got oppressed because of their speeches. We see that people going out to the streets with signs "No War," and they got imprisoned because of that. And this is ridiculous.
What is are you still in contact? Are you able to have any communication with Navalny? And do you still see him as that figurehead? Is he still able, in his incarceration, to rally the opposition?
Well, yeah, that's really interesting that despite the fact that he's in prison, he's still able to manage the protest and to lead it. And he asked everyone to go out to the streets through his trusted persons who visit him in the prison. And this message was heard, and there was quite a lot of people going out to the rallies last days. And as they announced, the Navalny team announced, the rallies will take place every single day from now, and that's gonna continue till the war ends.
I was in Barcelona at the Mobile World Congress a couple of weeks ago, and I was talking to tech executives there. They were saying they haven't seen major cyber attacks by the Russian state on Ukraine or indeed NATO allies during this conflict. And there was a level of surprise that hasn't happened. There was an expectation, given its history, that Russia would launch significant cyber attacks. Do you have an explanation for why that hasn't happened? Are they holding it still?
Good morning, traders.
As potential?
I'm going to place an order to sell short Japanese yen. So all of you guys, if you follow my trades, please place your order. You know the strategy, how it works. The order I'm looking to place to sell short, 117.765. Okay, order placed, 117.765. I will adjust. And let's wait until we will fill this order, and then stay with me, and I'll let you know what we're going to do next. We probably will hold this position for a while because we're still holding, as you can see, several short positions on euro. So if I'm going to sell Japanese yen, I need really good substantial profit, so I will not sell as I sell, for example, just one position if I hold, or two positions. Okay, if you understand what I mean, for people who has the strategy, you understand what I mean. So but anyway, stay with me, keep an eye on Japanese yen, and let's see what's going to happen next. Okay, stay safe, and I'll speak to you later.
The politics of oil. That is next, and this is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage.
Okay, guys, regarding Japanese yen, as you can see, it moved substantially down. So let's wait. Let's see how and where it will go, and then I will make new decision on Japanese yen. Okay, for time being, please cancel your order to sell short.
Manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open. We are 43 minutes into the European trading day. Gains of around 0.4% across the European benchmark, just coming off, pairing some of the earlier highs. You've got the FTSE 100 now lower by about 0.1%, but gains still across the DAX of 1.7%. At the top of the list in terms of your sectors, autos, followed by insurance and banks. At the bottom, basic resources down 2%. Talking of which, oil falling this morning. That's as Russia's bombardment of Ukraine prompts more calls to sideline the OPEC Plus producer. The suspension of Iran and those nuclear talks also weighing on the markets. Bloomberg's Anthony Di Paolo joins us now. Anthony, just walk us through, first of all, where things stand on the Iran negotiations.
Good morning, Tom. The negotiators who had been meeting in Vienna, now we're into almost the 10th month here. They've been discussing ways to get back into the nuclear deal that U.S. President Donald Trump pulled the U.S. out of in 2018. They've all gone back to their capitals now, so they're there. That's where they make the consultations with the governments, see what the governments want to do. And really what the Iranian side has been saying, and what we're hearing out of there, is that this is down to a diplomatic and a political decision now. So the negotiation work has been done. There's a deal there that could be signed, but they need kind of the governments to come together and see what they're willing really to concede on and where they're willing to make those final adjustments that will get the parties together to make that deal. So that's what we're hearing from the diplomats and the negotiators. That's what they're saying. They're saying that this is currently a pause, not a complete failure yet of the talks. And so we're going to see if there is some movement from the capitals, basically from Washington and Tehran, that gets them back together in Vienna to really finalize that deal. Of course, we've got some interference from Russia objecting to parts of that deal, and that's really thrown a spanner into the works here, and that's why we've got this delay, Tom.
Okay, so some additional complexities and what was already a challenging set of conversations there around Iran and the nuclear deal. And then, of course, the question marks was whether or not they're going to get it across the line. You're saying that it's not dead in the water yet. When it comes to the oil price today and to the action that we're seeing, lower by about 2.5% on Brent, what is underpinning that move for slightly lower prices?
Yeah, I think the name of the game here is volatility. We saw huge swings last week. We're seeing it start down this week, and there are many other factors that could come into that. This week, it looks like the word is also talks. There's some talks that are going on between the Russian and the Ukrainian sides about the conflict there and potential ways to end that Russian invasion. We've also seen some reports that U.S. and China are supposed to be talking. Of course, China is supporting Russia in its invasion of Ukraine. China is, again, one of the members of the group that is negotiating the Iran deal. So any kind of talks there are going to be useful. So it looks like oil is kind of grasping for any kind of positivity to come out of these discussions, and that's bringing the price down. Of course, that Iran news that you mentioned, that should all be bullish for oil. The fact that we've seen Iran launching some missiles into Iraq, the fact that those talks are stalled, and that doesn't get us that Iranian oil back into the market, those are all things that should be pushing the oil price higher. Of course, Russia is a much bigger producer than Iran. So if Russia, is out of the oil market, that's a bigger factor than Iran coming back in. So the oil market is kind of playing with those two factors and weighing that off. So we're grasping for positivity on those talks now, and that's where the oil price is going on that today.
WTI at 105, down 3%. Brent at 109. Anthony Di Paolo. I'll get my words out eventually. Thank you for that insight. Okay, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. The US and China are set to hold their first high-level in-person talks since Russia's invasion of Ukraine. National Security Advisor Jake Sullivan will meet with Communist Party Politburo member Jiang Qiyi in Rome later today. President Biden's top advisors have been working to increase pressure on China to enforce sanctions on Russia's economy. US officials say Russia asked China for military assistance for the war in Ukraine. A Chinese spokesman said he was unaware of any suggestions that China might be willing to help Russia. Beijing has repeatedly called for negotiations toward a ceasefire, but has stopped short of condemning the invasion. EU governments are said to be discussing sanctioning the owner of Chelsea Football Club, Roman Abramovich, along with more than a dozen other prominent Russians. Ambassadors from around the bloc met on Sunday to discuss a fourth round of sanctions and trade restrictions with energy and mining executives, as well as leading media figures among those who could be targeted. China has put 17.5 million people in the southern city of Shenzhen into lockdown for at least a week, with residents ordered to undergo 3 rounds of COVID testing. All bus and subway systems have been shut, and businesses, except those providing essential services, have been closed. That's as nationwide virus cases doubled to 3,400 over the weekend. Iran says it carried out a missile strike in northern Iraq and has suspended talks on restoring diplomatic ties with Saudi Arabia. That's days after Iran and world powers halted negotiations to restore a 2015 nuclear deal. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Tom.
Okay, Laura, right, thank you very much. Coming up, we reflect on the 18 minutes of chaos that broke the nickel market last week. That is today's Bloomberg Big Take. That is next. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City,
in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 52 minutes into the European Trading Open. You're seeing gains of around 0.5% across the benchmark. Euro-dollar is stronger. Ruble under pressure by about 10%, lower by about 10% in today's session. Some lines crossing as we know that the European officials are drawing up another sanctions package. They hope to finalise that today. That is one of the lines. The redhead, though, crossing the terminal, part of that package may include an export ban to Russia on cars valued at over 50,000 euros. So the EU mulling an export ban on cars valued at over 50,000 euros to Russia. We'll get you and bring you more details as and when they come through. Let's turn now our attention to today's Bloomberg Big Take, which takes a look at the 18 minutes of trading that broke the nickel market. When the commodities price went vertical last week, the metals industry was plunged into turmoil not seen since the tin crisis of 1985. Joining us now is Bloomberg Energy and Commodities reporter Jack Farchi. Jack, how serious then was the impact? What a remarkable week. How serious was the impact for the financial sector from what we've seen across the nickel space, and how dangerous is this, or was this moment for the LME?
Well, it was a hugely dramatic. I mean, this is probably one of the biggest moves we've ever seen in any commodity market. Nickel prices went up 250% in the space of about 24 hours. And really, where this caused a huge amount of pain was in margin calls. So any company that is involved in the physical nickel industry often hedges their price exposure with a short position on the LME. When the price goes up, they have to pay up cash in margin calls, and the margin calls across the whole metals industry were insane on Monday night and would have been even worse on Tuesday, but the exchange cancelled a whole series of trades. But what we're talking about is many billions of dollars of margin calls across the metals industry. It's caused a huge amount of pain. We reported this morning in our story, 4 or 5 of the brokers on the LME would have failed if the exchange hadn't cancelled those trades. So I think we did come pretty close to the edge.
I mean, it is remarkable, as you say. What happens next? Do we have any clarity on what the roadmap is next for this market, and when do you expect it to reopen?
Well, as we've been reporting for the last week, the real driving factor behind this squeeze in nickel is a short squeeze on the position of this giant Chinese nickel company, Tsingshan, owned by this rather amazing and very risk-hungry entrepreneur. I think the key to getting the nickel market reopened again is going to be a resolution of his position. He was struggling to make margin calls to his banks last week. That's one of the key reasons behind the short squeeze that took place. So we need to see some kind of deal, either for him to reduce his position or for him to get financing from somebody in order for the market to be able to reopen. And so far, we don't know when that's going to come.
Okay, Bloomberg's Jack Farchi, thank you for joining us, breaking us down what happened last week and all the implications and when trading may get back for that nickel market after what was a remarkable, extraordinary week. A line crossing the terminal right now, which ties into the commodity space, I mean, the centrality around oil, of course, and Russia. India and officials there saying it's considering buying discounted Russian oil. Now, that is according to Reuters. So just clarifying, India importing over 80% of its oil. They are considering buying discounted Russian oil. We'll have to see what the US response would be, and that is a Reuters report. Let's check in on the markets before we let you go. You're seeing gains of around 5/10, almost 0.6% across the European space. US futures, the S&P E-minis, gains of a similar amount, 0.6%. There's been a little bit of optimism, the mood music around diplomacy, Russia and Ukraine. We'll see if this holds. Chinese tech being absolutely hammered. Surveillance Early Edition is up next. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
We are breathing rarefied air in terms of volatility.
The markets are also going to feel the volatility for time to come.
The bigger picture is you're always looking at the systematic risk.
It's been a seismic shock, a seismic exogenous shock has hit the system.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, March 14th. Our top stories today. Panic selling in Chinese tech stocks. The Hang Seng Tech Index falls more than 10%. There's concern about COVID lockdowns and that Beijing's ties with Russia could lead to a backlash against Chinese firms. China's COVID-0 policy back in focus. It's hitting key Apple supplier Foxconn as it halts iPhone production in Shenzhen after the city is placed in lockdown for at least a week. And the US and China are set for their first high-level in-person talks since the invasion of Ukraine. Meanwhile, US officials say Russia has asked China for military assistance. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards with Danny Berger here in London and Matt Miller in New York. Kaylee Lines is off today. And Danny, it seems a lot of reasons for markets to be nervous, a lot of reasons for us to sell risk assets, but the market's not taking the opportunity to sell at all. The market focusing on the glass half full, perhaps. What diplomacy maybe can deliver instead of focusing on the war on the ground and concern around COVID in China once again.
U.S. European futures holding up well, especially considering what's happening in China. Anna, let me get to that because Chinese stocks have been absolutely slammed today. Those listed in Hong Kong putting up their worst day since 2008. Now, it's both the macro and the idiosyncratic. The macro being more lockdowns in China, higher COVID cases. It means a Foxconn factory that produces Apple phones is shutting down in Shenzhen. And at the same time, there's concerns of demand with new lockdowns. So that's why you see things like iron ore down more than 6.7%. But the pain is not just China broadly, it's concentrated in tech. So you have factories shutting down, 11% down on Hong Kong tech stocks. But you also have the idiosyncratic risk of more regulation. Now, this is focused on Tencent, a Wall Street Journal story saying that they are facing a record fine. This is over WeChat Pay. Regulators there saying that they violated anti-money laundering rules. Comes to accepting illicit payments for things like gambling. Tencent falling nearly 10%. That is its worst day in more than a decade. Finally, worth flagging the yen there. Up, U.S. dollar up 0.4% versus the yen. Yen at a 2017 low. Remarkable to see this not able to behave as a haven. Japan imports commodities, so that hurts it. And of course, Matt, the Fed hiking interest rates, so the dollar becoming the haven of choice.
It's pretty amazing to see that shift. You'd think that more people would flock into the yen if they're concerned about geopolitical risks. We see S&P futures up 0.7%. And as Anna was saying, it's pretty surprising considering the huge drops we're seeing throughout Asia that we're still bidding this market. Right now, the 10-year yield rises as investors let go of that debt. 205.68, so that 10-year yield continues to climb. 105 for a barrel of Texas Intermediate right now, down 4%. So keep your eye on oil. Obviously, that's where all the volatility and all the focus has been over the past couple of weeks. And then Bitcoin. You know, there's an argument to be made for looking at Ether rather than Bitcoin. Right now, Bitcoin, the OG crypto is up 1% at 39,028. Ether's up 2%. So keep your eye on the crypto space as we see a little bit more risk on coming into these trades. Anna?
Yeah, and as you launch your crypto show later on this week, more on that, no doubt, later in the program. But to Matt's point about what we're seeing here in Europe, about how European equity markets and US futures are not taking the opportunity to sell, we do see positivity. It is really varied, though, across the European geography right now. The Xetra DAX over in Germany up by 2.3%. The IBEX, the FTSE MIB in Spain and in Italy also doing pretty well. But in the London market, we see some relative weakness, even though we're even there in positive territory. And you might not expect to see that. I can show you what's going on basic resources, because this is acting as quite a weight on the European sector space. So maybe this is the one positive that is helping other risk assets move to the upside. That is that we're seeing some of those commodities come off their recent highs. That means negatives for basic resource stocks, but perhaps room for other risk assets to rally. So that sector down by 2.2%. The auto sector is moving to the upside, though, and that's lifting the German market. More on that in a moment. Process, this is another interesting take on what Danny was talking about what was weighing on the Asian session. So Process is Dutch listed. It's a business, though, that has a big stake in Tencent over in China. And as a result, we're seeing that China tech story, that tech weakness Danny talked about, spilling over into the European trading session, certainly when it comes to tech exposure, because there's the broad picture around lockdowns in Shenzhen, there's concern around regulation, and the specifics around Tencent as well. VW to the upside, up by nearly 7%. This company putting out earnings just after the bell on Friday, and this is the first time the market has had to react to that. So it's the earnings themselves and also the outlook looking fairly robust. They're talking about having substantial hedging in place around some of those commodity risks that this kind of business faces. And Telecom Italia up by 8.8%. An M&A story, which makes a change to talk about one of those, Danny, at this point. It seems that Telecom Italia is saying that, yes, they are going to allow senior management to talk to KKR, private equity bidders for the business, even though they say they prefer a sort of domestic solution, a reshuffle, a restructuring of their own business rather than that takeover option.
A lot of that geopolitical uncertainty means that a lot of deals have been put on hold, so good to see that some are still going forward. Now, let's get a look at what else you need to know to set you up for this week. And first off, EU finance ministers meeting today for the Eurogroup meeting. NATO defense ministers meet on Brussels on Wednesday. Also on Wednesday, we're going to get the big one, the Fed rate decision. Then the next day, it's the turn of the Bank of England with their rate decision. And finally, on Friday, it's the BOJ, their rate decision, Matt.
All right, so a lot going on in terms of central banks this week, but right now we're really focused on what's going on in China. They've locked down 17.5 million residents in Shenzhen as they face their worst COVID outbreak since the start of the pandemic. Apple supplier Foxconn halted operations at its Shenzhen sites after the lockdown, so it won't be producing iPhones today. And, of course, the market has come crashing down. Let's get more with Bloomberg's Debbie Wu, covers tech in Asia. Debbie, I really want to focus on the market first. What we saw last week was pretty incredible, and it continues this huge sell-off in China tech.
So, yes, so what happened today is the Hang Seng Tech Index in Hong Kong shed more than 10%, and it is poised for the largest drop since the inception of the index back in July 2020. And let's couple with the fact that Chinese companies are now facing renewed regulatory woes. So Wall Street Journal reported earlier that Tencent is now facing a record fine after the China Central Bank found that its WeChat Pay may have violated anti-money laundering laws. So and Tencent lost more than 10% in Hong Kong as well today.
Yeah, Debbie, really interesting story. So there's the broad lockdown story. There's what that's doing to the Shenzhen region, and that's what markets are pricing in. Markets pricing in supply chain disruption as a result of that, and also those Tencent specifics. But on that supply chain disruption, we've heard from Foxconn, a key supplier to Apple, of course. What's the latest there? What kind of disruption can we expect to see to that business?
So Foxconn has halted operations of its campuses in Shenzhen after the government ordered a lockdown in the tech hub city. And among all the campuses that Foxconn is suspending operations, one of them is a key iPhone production site. Although the scale of that campus is much smaller than its primary iPhone production site in central China. And impact so far has been quite limited. Other Apple suppliers in the region, which are suspending operations, said that they see limited impact for now. And then we'll see what happens next.
Okay, Debbie, thank you very much. That's Bloomberg's Debbie Wu reporting on all things tech from Taipei. Now over to Washington, where U.S. National Secretary Advisor Jake Sullivan said the U.S. is watching whether China provides material support or economic support to Russia. He spoke on CNN yesterday.
We will not stand by and allow any country to compensate Russia for its losses. There will absolutely be consequences for large-scale sanctions evasion efforts or support to Russia to backfill them. We will not allow that to go forward and allow there to be a lifeline to Russia from these economic sanctions from any country anywhere in the world.
Now, Sullivan is meeting today in Rome with China's top diplomat, and it will be the first high-level in-person talks since Russia's full invasion of Ukraine. Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from D.C. for more. Anne-Marie, what is the U.S. hoping to get out of these talks with China?
Well, I think it's about amping up that pressure on Beijing to make sure, really twofold. One, news over the weekend that they don't go ahead and come to the rescue of President Vladimir Putin, who's looking for military assistance from Beijing. And then second, to make sure that China doesn't try to go around the U.S. economic sanctions. And this is really the second warning we heard from Jake Sullivan on the Sunday shows. Last week, we heard from Secretary Gina Raimondo, making sure the chip sector in China was on guard about this and making sure that those warnings are there, that they will face pressure from the United States and they will face penalties from the United States if they were to come and at the behest of the requests of President Vladimir Putin.
What do we know about the accusation that Russia asked China to provide military support, including weapons?
So we don't know exactly what kind of weapons these are from the U.S. government. We also don't know how they have that intel. And another U.S. official told Bloomberg that actually this request was made after that initial invasion on February 24th. But the news is coming at a time when you see President Vladimir Putin struggle as this war enters into a third week. For China, though, the question is really or not it wants to get involved in such a very direct way. China this entire time has really been trying to walk this line. They haven't come out and condemned Russia directly, but at the same time, they also haven't had this support towards Russia. And if they were going to give weapons, that would totally get rid of that veneer of neutrality that China is trying to project. So it's a very interesting question. And of course, it comes at this time, a sensitive time, when you have Jake Sullivan, the president's national security advisor, going to Rome to have these one-on-one, high-level, sit-down talks with China's top diplomat.
Okay, so we look ahead to those meetings then, the U.S. and Chinese officials set to meet. As you mentioned there, Anne-Marie, thank you. Anne-Marie Horder joining us there from Washington. Now, talking of talks, negotiators from Russia and Ukraine are set to hold their further talks today. That's after Moscow increased its aerial attacks on western areas of Ukraine, closer to the border with Poland. Ukraine's President Volodymyr Zelensky says he hopes for a meeting with Putin.
Representatives of our countries are holding daily talks via video conference. Our delegation has a clear task to do everything to arrange the meeting of the presidents. The meeting, I'm sure, people are waiting for. It's clear that it's a difficult story, difficult path, but we need the path.
Let's get more with Bloomberg's Agatha Cantrell, who joins us now from the Polish-Ukrainian border. Aggie, of course, it's been a really interesting weekend, a destabilizing one, no doubt, where you are, given that we're now seeing Russia attacking western parts of Ukraine more aggressively, closer to the Polish border where you are.
Hi, Anna. Yes, so on Sunday morning, we saw that there had been a missile strike on a base called the International Peacekeeping and Security Center that's just over the border from Poland into Ukraine. And this has obviously caused a great deal of concern on the Polish side of the border as well. The local mayor from that area of Ukraine said that this was yet another reason why NATO needed to close the skies, as they put it, essentially put in a no-fly zone over Ukraine. That doesn't look like something that NATO is likely to implement, but is still seeing a greater amount of concern on the Polish side of the border now that the fighting seems to have, for a certain extent, come closer. Although it needs to be noted that most of the fighting is still around Kiev and also in the south and east of the country.
Is it fair to say, Aggie, that you're at kind of the epicenter of the migrant crisis right now? What can you tell us about the international response to all of the refugees flooding over the border?
Yes, Matt. So we're seeing so many more refugees come over the border in these coming days, and already Poland has taken in 1.5 million of the total 2.6 or 2.7 that have crossed the border. Because there is no willingness really from NATO to close the skies over Ukraine, really a lot of the pressure comes from international sanctions that could be put in place. Like, for instance, we're hearing that the EU is now mulling banning the sale of cars valued over 50,000 euros to Russia. And sanctions like this upping of the pressure economically to Russia is really the main tool that the EU has right now.
Aggie, thank you very much. That's Bloomberg's Aggie Cantrill on the border between Ukraine and Poland. Now let's get a look at some of the stocks on the move. I want to come back to this China story because China ADRs listed in the U.S. falling pre-market. We're starting to get to .com level of pain in these stocks. Bilibili, for example, the tech company, again, Chinese, listed in the U.S. in an ADR down over 10%. The concern is that with more regulation coming onto Tencent, according to Wall Street Journal report, that will spread out as well. Now, the other tech story, of course, happening in China is the Foxconn closure of factories in Shenzhen that make iPhone products. Apple holding up pretty well considering that. It's only down about 0.05%, so really unchanged at the moment. Perhaps there's less fear that now is typically a slow season for iPhone orders anyway, so maybe it's okay if there's less production. But at one point, this was down about 0.25%. Finally, Lockheed Martin, more of the geopolitical story here. According to DPA, a German outlet, the German government is looking at replacing their fleet of what's called tornado jets. I'm going to admit ignorance here. This is definitely not my strong suit, but it's a fleet that's about 40 years old, and they might replace it with some Lockheed Martin stealth jets. So that is up 2%, Anna.
Okay, that's the pre-market roundup. Coming up, Andrea Sheets, Morgan Stanley's chief cross-asset strategy voice. We will talk to him shortly about what's going on in markets. The market's right to be taking a glass half full approach, which is what we seem to be seeing from risk assets this morning. From a geopolitical perspective, we will talk to Bettina Renz, University of Nottingham, Professor of International Security. That conversation coming up later on this hour. Plus, the 18 minutes of trading chaos that broke the nickel market. You can read all about that at NI Big Take. That's our Big Take story for today. Go to that function on your Bloomberg terminal. This is Bloomberg.
Going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller in New York. Danny Berger with Anna Edwards in London. Kaylee Lyons is out today. We're just looking at a U.S. 10-year yield right now that is rising right now to almost 208. Now 208 and change. This is the highest level that we've seen since 2018. So it's been a while since the 10-year yield was this high. And our producer in London, Valerie Sarasuelo, points out that the curve is steepening right now. So the real concern was that we would see the curve continue to flatten and possibly invert. Maybe right now that's less of a concern, but we do see break-evens surging to record highs. Let's bring in Eddie Vanderwalt right now from the Bloomberg MLive team. Eddie, what does this mean, the moves that we're seeing in the bond market? I guess the volatility is pervasive.
Yeah, and look, I think this is a function of the moves that we've seen, or the high inflation that we've seen that, you know, is now definitely no longer transitory. I think inflation is proving to be persistent, and the bond market is pricing that. But I think this causes a lot of problems for portfolio managers, because how do you hedge the inflation risk at the moment, right? Do you go with gold? Well, gold is already very, very richly valued. Do you go with commodities? Commodities are really, really elevated in a lot of cases. You know, bank stocks have had exposure to Russia and to other things. It becomes really hard to hedge the inflation risk at the moment. And this is something that we're taking a hard look at the moment on Markets Live.
All right, Eddie, thanks so much for joining us. Eddie Vanderwalt there from the Bloomberg MLive team. You can check out MLive Go on your terminal if you want to follow along with markets. Also, I want to point out, hang on, let me plug myself for a second. Kaylee and I are kicking off a new crypto show, Bloomberg Crypto, tomorrow. That debuts on the Ides of March. Eddie will probably be with us on a weekly basis there, as he's one of our avant-garde crypto reporters. And speaking of avant-garde, Michael Novogratz joins us on the first program. Definitely tune in tomorrow at 1 p.m. on Bloomberg Television. You can also follow along on Bloomberg.com. Just click Live TV. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now, keeping you up to date with news from around the world, here's the First Word News. Russia has lost access to almost half of its reserves. The finance minister told state television that the country has about $640 billion and about $300 billion can't be used because of asset freezes. He said Russia will repay debt in rubles until its cash pile is frozen.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Can you stop looking directly at the lights because I'm currently blind after doing that?
Yeah, if in doubt, blind us.
Aren't the lights bouncing off of your glasses lenses?
That too. Matt, you should have worn your glasses today in all glasses edition.
15.
Oh,
This is Bloomberg Surveillance Early Edition. Here's what you need to know. There's panic selling in Chinese tech stocks. The Hang Seng Tech Index fell more than 10%. There's concern about COVID lockdowns and that Beijing's ties with Russia could lead to a backlash against Chinese firms. China's COVID-0 policy has hit a key Apple supplier. Foxconn halted iPhone production in Shenzhen after the city was placed in lockdown for at least a week. More than 17 million people were told to stay at home and undergo 3 rounds of coronavirus testing. And the US and China will hold the first high-level in-person talks since Russia's invasion of Ukraine. The Biden administration wants Beijing to use its influence on Russia to end the war. Meanwhile, the US says that Russia has asked China for military assistance. I'm Anna Edwards with Danny Berger in London. Matt Miller, of course, with us in New York. Kaylee Lines is off today. So there's plenty of geopolitics to talk about, whether it's the war itself or the US-China relationship here. Matt, what are you looking at ahead of the market open?
I'm looking at the risk-on mood that we have to kick off the week in the U.S. I think it's pretty surprising considering the sell-off that you've seen in China. But S&P futures are up 0.6%, and investors are selling 10-year treasuries, letting the yield float up to, at one point, more than 2.08%, so the highest that we've seen since 2018. Some real moves to the upside, some real risk-on moves today. Maybe NYMEX crude falling a little bit more has something to do with that. Now we're down below 105 a barrel for Texas Intermediate. And Bitcoin is rising as well, only 0.9%, right now $39,044. But we do see other coins in the crypto space, specifically Ethereum, rallying a little bit harder today. So definitely a risk-on signal. Danny, what do you see in terms of the pre-market movers?
Well, Matt, don't you know it's the Elon Musk hypothesis? Just a few hours ago, he tweeted that he still holds Bitcoin, Ether, and Doge. So, you know, maybe that's helping out a little bit. But when it comes to pre-market, I should say there are some crypto companies moving higher. But I'm following this thread of the destruction in Chinese tech stocks, and that's spilling over into the U.S. Session Bilibili and ADR down 11.5% pre-market. Part of the concern is about regulatory pressures. The Wall Street Journal reporting that Tencent is facing a fine. The other concern are more lockdowns. Foxconn shutting 2 of its factories in Shenzhen that produce Apple products. It won't be making Apple products from that factory. Apple slightly weaker so far this morning, 0.2% in the pre-market session. Finally, Lockheed Martin up more than 2%. This is a report from DPA, the German outlet, saying that German government plans to replace what's called its Tornado military aircraft fleet. It's been in use for more than 40 years, so perhaps it's due for a change. So instead, the government is going to replace it with F-35 stealth jets. And that, of course, is from Lockheed Martin, Anna.
Yeah, Danny, let's have a look at where we are on the European trading story then, an hour and a half into the trading day here in Europe. And we've got European equity markets actually on the front foot. And to Matt's point, you know, maybe that is a little bit surprising given the war on the ground in Ukraine and now concerns around supply chains to do with what's going on in China, of course, and COVID-19 there. But still, we make gains up by just over 1% on European stocks. Of course, we should focus on the Fed. We'll no doubt do that. That's going to be a big talking point of this week. Prosus is down by 10%, more than 10%. This is a Dutch company that has a big stake in Tencent, one of the Chinese tech names in focus today. And then we've seen heavy selling in Tencent because of specifics to do with that business and reports around it, but also to do with the broader lockdown story that I mentioned around Shenzhen, which is a tech hub, of course, over in China. VW up by more than 7%. We got numbers out from VW after the close on Friday. It's the numbers themselves, also the outlook, which seems to be lifting that particular stock, and also their talk of hedging, substantial hedging they say they have in place when it comes to the higher commodity prices. And Telecom Italia, nice to talk about a little bit of M&A, because maybe some businesses putting those thoughts on hold at this point, given the volatility we're seeing in many asset classes. But Telecom Italia is saying, yes, they will allow senior executives to talk to KKR, because that business, that company has been interested in buying up Telecom Italia. So we'll focus in on that M&A story as well, Matt.
All right, so still some M&A on this Monday. Let's get back, though, to the economic fallout from Russia's full-scale invasion of Ukraine. Is likely to include a further pickup in U.S. inflation, according to Mohammed El-Arian, Bloomberg opinion columnist and Queens College Cambridge president. He spoke on CBS's Face the Nation yesterday.
There will be a Putin inflation component. I estimate that at 7.9%, we will probably get very close or above 10% before we come down. And that difference will be all because of the disruption that Putin's war implied for commodity prices, supply chains, and shipments.
Mohammed also wrote an opinion piece for us. You can check it out on the Bloomberg. Type OPIN GO or NIL Arian. Let's get over to Andrew Sheets, Chief Cross-Asset Strategist at Morgan Stanley, to get his take. Andrew, we're hearing more and more people saying a 10% printout is a possibility. This puts the Fed in an incredibly difficult position because you've got the inflation to fight clearly, but also slowing growth concerns. How do you square that circle?
Yeah, thanks. Good morning. It's nice to be here with you. So we think the Fed errs on the side of the inflation concerns. Part of that is, we think that Chair Powell made a pretty clear commitment that he wants to do whatever it takes to bring inflation down. That credibility is very important. But also, we think in both how Morgan Stanley is tracking the economic data and how the Fed is tracking the economic data, that the economy is still fine in the first quarter. The growth is tracking okay, that this conflict is not going to tip the economy over into recession or a severe slowdown. And so that gives the Fed, we think, more leeway to ultimately hike rates further up towards a higher terminal rate than the market's currently pricing.
Andrew, so that's the war in Ukraine clearly will be something that will be thought about a lot by that particular central bank and many others that are meeting this week. What about what we're hearing out of China at the moment? Further lockdowns, big lockdowns being put in place, in particular in the tech-focused area of Shenzhen right now. How much pause for thought does that give global policymakers around the growth story, around supply chain disruption that could ensue?
Yeah, look, so this is another really good point, is that the lockdowns in China, further lockdowns in China production, are yet another negative supply shock for the global economy, for the U.S. economy. But that sort of negative supply shock is going to create only more inflationary pressure, which we think the Fed would continue to hike rates and continue to tighten policy because of. So I think it's just one more link, actually, in terms of why the Fed ultimately will need to keep hiking, will need to hike to a higher terminal rate than the market is currently pricing. And again, while these supply chain disruptions could be significant, we don't think they are going to slow economic activity enough where they would reduce more inflationary pressure than they would contribute to.
Okay, and Andrew, we've been thinking about that inflationary pressure because, of course, of what we've seen in commodities. Today looks a little bit different, a little bit of respite from the higher commodity story. We're down more than 3% on Brent with a 108 handle right now. But the direction has been upwards. We've seen a substantial spike up in oil prices. I know that you've been doing research on what the after effects of that spike in oil prices might be for other asset classes.
Yeah, great. So when we look at past periods where oil prices have spiked significantly, what we see is initially the market being quite weak over kind of the next month after those larger spikes, those kind of 15% plus up moves in a month. but then actually ultimately doing well. And so those spikes tend to be more fleeting for the market than permanent. That's especially true when the oil curve looks like it does today, when it's backwardated. That tends to be more consistent with strong demand, which is indicative of a strong economic backdrop. So I think the same playbook could play out today. We're obviously in a period still where we're seeing some weakness, but the curve being backwardated, we think is still consistent with actually a pretty solid global backdrop. We think it's more inflation than stagflation at this point. And ultimately, we think that actually means that longer dated oil prices can be a little bit higher. The front part of the curve is close to our forecast. The back part is lower.
Andrew, let me take you to the tail risk scenario, and it's one that Bank of America lays out of Russia cutting off Western oil supply. They say oil could go as high as $200 a barrel. There'd be a credit crunch. You'd see high yield basis widen about 500 basis points. Andrew, do you need to have preparation in your portfolio for such a scenario, even if it's not your base case at this moment?
Yeah, thanks, Danny. Look, I mean, it's clearly a possibility. I mean, I think it's a risk the market, is thinking about. I think that might help explain why, European assets saw such a significant underperformance over the last month. They clearly are more exposed to these sort of energy disruptions than other markets. I think that if we think about these risks, though, we do need to think about some important factors in terms of what's priced in, and there I think the oil curve itself is quite interesting, because the oil curve is pricing quite a bit of tightness, quite a bit of risk premium in kind of oil over the next month or two, but that longer term oil price, the oil price 6 months from now or 12 months from now, drops off significantly. So yes, I think the market is afraid of that disruption. It's not afraid of that disruption lasting for a more severe period of time. And I think in any scenario where we're talking about, say, materially higher default rates, oil price disruptions would need to occur for a longer period of time. So as a portfolio hedge, we like that longer dated oil as a way to hedge against that.
Okay, so it's not just where we spike to, but also the backwardation and the structure of the oil market that's important. Andrew, thank you very much for your time. Andrew Sheets joining us there from Morgan Stanley. Coming up on the program, we'll get to the geopolitics. Bettina Renz joins us, University of Nottingham Professor of International Security. We'll get her perspective on what diplomacy can really achieve this week and the situation on the ground. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
from New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I do think that Putin's trap for China, signing this huge declaration on February 4. On February 4, he already knew that he will invade Ukraine. And he already knew that bringing this visibility of China, a supporter of Russia, would have toxic consequences for Chinese image and for Chinese economy.
That was the Ukrainian ambassador to Japan speaking earlier to our colleagues here at Bloomberg. Let's get more on the war in Ukraine with Bettina Renz, Professor of International Security at the University of Nottingham. Bettina, good to speak to you. Thanks for joining. What is the role that you think that China will go on to play here in this conflict? Because they've been walking a tightrope up until this point, trying to maintain some sort of neutrality, but also stressing the strong relationship that they have with Russia and condemning some of the violence on the ground. So how do you see the role of China developing? Seems crucial as to where this heads next.
Yeah, it's very difficult to predict at this moment. Of course, so far, China has failed to come down decisively, taking sides in this particular war. And also, as I read earlier, the Chinese officials said that Russia's request for more weapons that was discussed in the media yesterday is American disinformation. So we don't really know at this point, of course, what exactly Russia requested. But of course, China is in a very difficult situation. And I say this not as a China expert, but as a Russia expert who knows a bit about the relationship between the two. Of course, Russia and China have a strategic partnership. There are many agreements when it comes also internationally about the US's role in the world, about multipolarity and standing up to what they see as US hegemony and so on. But there also is the understanding that in this relationship, China is much more and has been more important to Russia than the other way around, because economically, of course, China's relationship with the West and with the US in particular is very important.
Yes.
From this point of view, I think, well, we will have to see, obviously, how China reacts. But my hunch would be that especially if China perceives Russia to be on the losing side of this war, and obviously there are indications that this is clearly not going Putin's way so far, that they will be very careful about openly supplying military equipment and so on to Russia at this point.
Well, you know, we heard the ambassador in that interview with Sherry-Ann earlier say that China's making the wrong decision here because of, you know, the economic ties that it's already forged with Europe. Those would have to be severed in case of, well, in case of a NATO versus Russia conflict. Is the bet here that, you know, Europe is already so entwined with Russia economically that they can't disentangle themselves? Is the bet here that China is also that deeply involved and meshed in Europe's economy?
Well, that again, I'm not neither an economist nor a China expert, but obviously from what I know, there is a lot of interaction, a lot of import, export going on, much more so actually than with Russia between the West and the US. And therefore, I would have thought that China will be quite carefully watching also how the US and the West is reacting to any potential Chinese involvement in this particular war at the moment. Because like I said, ultimately, Russia's economic relationship with China is less important to China than the economic relationship and you know, at least a workable relationship with the US and with the West.
Bettina, you wrote the book on the Russian military, and I mean that quite literally. You wrote the book, Russia's Military Revival, some years ago. Now we're in a situation where, as you said, much reporting has been done on the slowness of Russia's military. They reportedly looking to China for help in the military. What does this tell us about the state of play of Russia's military?
Well, I did argue in my book, which came out in 2018, that obviously the Russian military had modernized to a large extent. It was incomparably better compared to itself, compared to the Russian armed forces in the 1990s and so on. So obviously, we saw how Russia performed in Crimea and also then in Syria, where they showed technologies that we had not seen before from Russia and standoff capabilities, excuse me, as well. However, I also said in the book that, of course, when it comes to operational art and overall capabilities, Russia still is behind and continues to be behind and not comparable to the world's most advanced armed forces and the US in particular. And this is also something we see, of course, now. I think in some ways, some analysts had overestimated the extent to which Russia would be able to fight these modern combined arms operations. But having said that, of course, that comes at little consolation to Ukraine at the moment, because in spite of not being as skilled as people expected, of course, Russia continues to inflict unthinkable and absolutely barbaric destruction on Ukraine, death, destruction of infrastructure, and so on.
And Bettina, I want to ask you about Russian leadership at this point. There seems to be a lot of debate as to whether this will, in the end, result in any change in leadership in Russia. Do you see any means by which that happens?
Not anytime soon. I think that would be my major point. It seems clear to me, and also many people would agree with that Russia's war in Ukraine was an absolutely massive strategic mistake on behalf of the Putin leadership, and it is irreversible in many ways. And obviously, it will not be forgotten by the West, by NATO, obviously by Russia's neighbors, Ukraine, no matter how the sort of immediate outcome of the war will be in the long term. And Russia will have a very hard time to recover from this in the long term. So I think ultimately there will be a change, or there has to be a change in Russia's political regime. I mean, we saw during the Cold War how the Soviet Union ended up when they basically put all their effort into military capabilities, when they tried to compete only in the military dimension, not being able to compete in other ways and so on. But the point is that I would not expect this to happen anytime soon. This could be a matter of decades.
Okay, no time soon. Bettina, thank you very much. Bettina Renz of the University of Nottingham, thank you for bringing us your thoughts. Coming up on this programme, in fact, coming up in the next hour, more on the war in Ukraine with Tina Fordham, Fordham Global Foresight's head of global political strategy. That's at 6:30 a.m. in New York, 10:30 a.m. in London. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Danny Berger in London. Kaylee Lyons is off today. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now with a look at what he's got coming up today in the program. And Tom, your single best chart, what are you looking at?
That's one indicator of the Pacific Rim, and it's suddenly the Pacific Rim, Matt. It's real simple. Things over there are a little shaky. Of course, all this coming off the war in Ukraine, but much, much more, including COVID in China. And one of the great thermometers of the Pacific Rim is to the north and the Japanese yen. The chart's real simple. Yen, safe haven, stronger yen, has abruptly and with a vengeance gone the other way. And to be out to 117 yen is a big deal. Long ago and far away, David Malpass, then of Bear Stearns, now at the World Bank, talked to me about 120, 130 yen. It's sort of a shock that we would even get to 120, and a weaker yen 130 is basically unimaginable.
And Tom, I know you're going to be talking about FX, putting FX front and center with some of the guests you've got coming up, but also the geopolitics, of course.
Well, the geopolitics is front. It's an odd day, and you're, of course, living it in London with some of the news flow. It's sort of a clumsy Monday. Elsa Lingos will join us with RBC with a wonderful perspective on Euro and those dynamics, and we are honored to bring people Seth Jones at CSIS. This guy is the real deal. He is the American expert on guerrilla warfare. There's no other way to put it. He's the legit special operations expert on what Ukraine needs to do.
A lot to stay tuned for then, Tom. Thank you. Tom Keene, co-anchor of Bloomberg Surveillance, will be back with that great lineup of guests a little bit later. And Matt, we've been remarking on how we see quite a lot of risk appetite in today's session. European equity markets to the upside, yields going higher, despite all of the negative headlines that we keep on covering.
Yeah, but wait, actually, while we're in the 3 box, let me go ahead and throw on my glasses as well, because I just wanted to do this at one point during the program.
Yes, for radio audience, we are all wearing glasses that I think are maybe all exactly the same pair as well. It's your glasses edition.
Standard issue.
Yeah, exactly. Sorry, Matt, go ahead.
Well, I was just saying, it's interesting to see this crash in China tech shares and still the risk appetite that we're seeing in Europe and ahead of the U.S. Open.
Yeah, absolutely. It does filter through, but it doesn't dominate. More Bloomberg Surveillance is ahead. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida.
And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Inflation has really been dragging down Americans' perceptions.
We do need households to eat into what is a large reservoir of excess savings to make it through this.
We have some buffers to eat through before the risk of a recession becomes real.
The market's actually been relatively well behaved.
You know, look, in the equity options market, things are still business as usual.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up more than 1%. TK, once again, the difference between words and action.
Really interesting Monday here on so many fronts, and the words in action are the tumult off the Pacific Rim in China and in Europe. I'm sorry, John. Everybody's got their guard down after an emotional weekend. We're waiting for news, but still front and center is a war.
Well, let's start with that war in Europe, Tom, and the fact that Russia hit that base 15 kilometers away from the Polish border. At the same time, on the weekend, the chief of staff of the Ukrainian president said that perhaps diplomatic talks were going in the right direction. Again, Tom, talks one thing, action quite another.
And we wait for the action, not only the action to hear from Moscow, but really from the allies in NATO as well. John, I would really suggest that there's almost a pause here, and we simply wait, and we do that around all of the economics, including Fed Day that we see coming up on Wednesday.
Step up, step in, China. Lisa, over the weekend, several reports suggesting that the Russians have asked the Chinese for help on the military side of things. Today, in Rome, Jake Sullivan, National Security Advisor, alongside the top diplomat out of China. Those talks want to watch.
And frankly, I think this is the most important aspect of the day, because does the U.S. come in to pressure China to move further away from Russia? How much is that the next step of tightening the screws that we see from the U.S. administration, when a lot of the sanctions that have been implemented already are considered incredibly harsh? And how much does that ratchet up the global tensions?
China's got its own problems. Shenzhen locking down. Now, I look at the move at crude this morning, Lisa. WTI down 5%, Brent down 4%. Is that in line with risk appetite that we're seeing in the equity market? Is there a China effect through commodities this morning as they lock down city after city?
You know, I can't answer that question. Is it because people are more optimistic about talks? Is it because the global economic slowdown that a lot of people are expecting is just accelerated by the prospect of ongoing supply chain snarls stemming from China? I don't know, but I do know that it is significant, and it comes as an inflationary or even stagflationary shock, an additional one at absolutely the wrong moment.
TK, Brent crude 108.
Brent crude 108. I looked at it technically, and it's just back after the huge surge up. You know, I don't know if technicals work within a war, but it is worth watching. And of course, the food emotion as well. John, Chicago rice is up 69% since 2016. That does not correlate with Thailand rice, but nevertheless, it shows even rice is beginning to move. John, we feature Bruce Kasman at the top of the show. Their weekend note: we are dented, not derailed.
looking forward to catching up with JP Morgan. Let's whip through this price action for you. Equity futures session highs on the S&P 500 up more than 1%, on the Nasdaq up 0.9%. Equities up, crude down. WTI 104 down by almost 5 percentage points. And look at this in the bond market. Lisa up 10 basis points, almost 2.1% on 10s, on 2s through 180. The Fed a couple of days away.
And one thing that I thought was really interesting in a lot of the notes over the weekend is people are bringing up their forecasts for how high the end rate, the terminal rate for the Federal Reserve may be, given how much inflation we're seeing and frankly how long it's persisting. And I think that that's what you should watch, what I'm watching, as we take a look at risk assets, especially given the fact that a lot of them are hinged on a very low discount rate. John, as you said, today the U.S. National Security Advisor Jake Sullivan is meeting with the top diplomat from the Chinese Communist Party, Yang Jiechi. They are meeting in Rome. How much do they give some sort of conclusion as to how much China is helping Russia, how much they are willing to come in, and how much they're willing to adhere to some of the sanctions the U.S. has threatened to tighten the screws further, to basically impose even more significant sanctions on China if they do not comply with some of the ongoing restrictions that the U.S. has put into effect. At 8:30 a.m. on Bloomberg Surveillance, Tom was talking about this earlier. Seth Jones for the Center of Strategic and International Studies is coming and joining us. I am very interested to hear what he has to say about the new forms of guerrilla warfare, namely on the cyber front, on the media front, and some of the fronts that are being used in the financial world. How much has this changed the conversation, this Ukrainian war, on how war is fought in 2022? And today, EU finance ministers meet to discuss what the budget will be for 2023 and how to come up with a proper fiscal policy. How much do we hear about possibly spending more to support the euro area as we deal with this stagflationary shock at a time when borrowing costs are rising? And this is the perfect measure for it, John. If you look at the total volume of negative yielding debt globally, it has fallen to near the lowest going back to 2015 at about $4 trillion of outstanding debt, down from well past $14 trillion, just giving you a sense of how much things and how quickly bond yields are shifting.
Lisa, thank you. Team coverage starts right now with Bloomberg's Anne-Marie Jourdain in Washington, Maria Tadeo in Brussels, and on the Polish border, Aggie Cantrell. Anne-Marie, I want to start with you. The talks between the U.S. and China today, how significant is this?
Well, it is significant because you heard from Jake Sullivan over the weekend, the president's national security advisor. He is going to be the one going to Rome, sitting down with Yang Jiechi, the top diplomat from Beijing. And what he signaled over the weekend, that there has been very privately this pressure on China to make sure that they are not coming to the aid of Moscow on the economic front or the military front. And this news then broke that Russia is actually looking to China to come in and help militarily. We don't know exactly what the ask was, and one official had said that this was an ask actually at the start of the invasion, but it comes as Russia enters this third week of the war, and they have yet to capture the entirety of Ukraine, which is under the presumption of what President Putin thought he was able to do. So this is really going to be a time for the United States to put some serious pressure on Beijing, but also remember, China recently had this brand new, foreign policy decorum with Putin, saying that their relationship has, quote, no limits. I think this Ukraine test will decide whether or not the relationship does in fact have limits.
Maria Tadeo, the Ukraine people have limits. I thought there was a dearth of news starting in the U.S. about 6 p.m. last night. What are you watching for this morning? What is the news item of this war, this battle that has Maria Tadeo's attention?
Well, Tom, we have to wait for that video conference between the Ukrainian delegation and the Russian delegation. Remember, they've met now 3 times, but there hasn't really been anything significant that has come out from those meetings. But the Ukrainians now say that Russia is beginning to listen, that this is not just ultimatums, that they want to listen and have a conversation. The Ukrainians, by the way, repeated this morning, they want to see a ceasefire, they want to see a troop pullback and security guarantees. When it comes to security guarantees for the Ukrainians, and remember, this is what I was told last week. This is not just about Russia. They would want to get every neighbor, including Turkey, but also Germany, the United States, involved in these talks. Now, the other thing that I would point to, of course, is that in the country, remember, this is now 19 days of war. There's a message that's really resonating among Ukrainians, which is they've stood the test of time. They're winning this war in their eyes. They're resisting. That by itself is winning. And they won't just settle for any peace deal. I think we really need to keep that in
in mind. A peace deal is not something they would get or approve if it doesn't meet their terms. So again, I would be very cautious about this idea that Ukraine will settle for anything, because the impression that I get is that they still want to get something very concrete on paper, and they would want to get an international accord around it, not just Russia. They do not trust Vladimir Putin, and they do not believe what the Kremlin says.
Meanwhile, Aggie, more than 2.5 million refugees have left Ukraine. A lot of them have gone to Poland. There have been concerns about overcrowding in some of the cities that people are concentrated. What have we heard from other nations throughout Europe and even the U.S. about bringing additional refugees to their place?
Hi, yes. There has been a lot of concern in Poland about the sheer amount of refugees coming into the country, although Polish authorities, it must be said, have been doing a lot to make sure that this is happening as smoothly as possible and trying to accommodate people, not just in camps on the border, but actually in the cities. But they need support from other countries, and that is something that the Polish have been very clear about. They have taken the brunt of the refugee flows over from Ukraine. 1.5 million people have come into Poland since the war began, and that is something that now they're expecting to get support from other countries, not just financial support, but also people to take on those refugees, and that they don't all remain in Poland. But it's also important to note, a lot of these people want to stay relatively close to the borders, because as far as they're concerned, a lot of the refugees who I've been speaking to really hope that this is going to be a temporary issue and they won't have to permanently resettle in another country.
Aggie, thank you. Wonderful work, as always, on the border of Poland. Aggie Cantrell there alongside Maria Tadeo and Anne-Marie Hortin down at DC. A couple of things to look out for in 15 minutes' time. In the next 10 minutes, rather, we're expected to hear from the president of Ukraine, Zelensky, a little bit later, Tom. Then after that, 7:30 Eastern, we should hear from the foreign minister of Ukraine, Kuleba, a little bit later too. So two things to watch through the next 90 minutes or so. The other thing to watch as well, late on Friday, Tom, Goldman Sachs out with a cut of their forecast on the S&P 500, 4,700, so 10% upside from here. The previous target, 4,900. Remember, the one before that was in and around 5K, so we're down to 4,700, Tom, on the S&P for Goldman year-end.
Not only in the equity markets, but also with inflation and GDP. Inflation estimates going up, GDP going down. Michael Ferroli on a Friday note, John, has inflation well out over 5%, and the JP Morgan GDP call comes in. It's about a 7% nominal GDP, which is sprightly to say the least.
The direction of travel, though, the cuts are coming through, Lisa. From Goldman, lower earnings, lower price.
Right now, it's hard to see how we can avoid that type of trend, given the fact that the Fed is facing the highest and fastest inflation rate going back to the early 1980s, and you have this stagflationary shock that a lot of people say will crimp consumer spending.
Do you want to talk about agent Cristiano Ronaldo now, Tom? Or would you like to do that later?
Oh, I think we should do it later.
Brady coming back for an extra season.
Yeah,
Come on. You're going to let that go?
Yeah, no, Harry Kane convinced him. Let's be honest here.
I thought it was
Harry
Cristiano, Tom.
No.
What was it that
Maybe
Harry
it was a
Kane
joint
did
effort
that convinced him?
He said, look at the tots, and you need
How
to get
easy this
another
might
trophy
be,
unlike us.
even later on in life.
I want to do it later, but
let's do it now.
Let's do it now.
Futures up 0.9%. Brady back for another season. Congratulations to him. Back to Juve, to who, Tom?
Ronaldo,
Cristiano.
go back to Italy. Come on, we don't need him there.
Futures up 0.9 on the S&P. On the Nasdaq, up 0.7%. Yields higher, approaching 2.1%. What a week ahead. The Federal Reserve decision this Wednesday.
Keeping you up to date with news from around the world with The First Word, I'm Ritika Gupta. The US and China will hold the first high-level in-person talk since Russia's invasion of Ukraine. National Security Advisor Jake Sullivan is meeting today in Rome with China's top diplomat, Communist Party Politburo member Yang Jiechi. The Biden administration wants Beijing to use its influence on Russia to end the war. And China has placed the 17.5 million people of the city in Shenzhen into lockdown for at least a week. They've been told to stay at home and will undergo 3 rounds for coronavirus tests. That came after virus cases nationwide doubled to nearly 3,400. Apple supplier Foxconn is halting production at its Shenzhen sites, one of which makes iPhones. And the US says Russia has asked China for the military assistance for its war in Ukraine. It's an unusual request that suggests Vladimir Putin has faced more setbacks in the invasion than he imagined. The US isn't saying what kind of equipment Moscow has requested. China calls the US statement disinformation. This week, the Federal Reserve will begin its campaign to conquer inflation. It's a fight that could see Chair Jerome Powell moving even more aggressively after Russia's war on Ukraine led to more price hikes. A 25 basis point increase in interest rates is near certain on Wednesday. And in sports, pro football star Tom Brady has changed his mind and is not retiring after all. Brady will return for a 23rd season in the National Football League. The Tampa Bay quarterback says he realized his place is still on the field and not in the stands. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Big Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
We have communicated to Beijing that we will not stand by and allow any country to compensate Russia for its losses. There will absolutely be consequences for large-scale sanctions, evasion efforts, or support to Russia to backfill them.
What an interesting time for the US and China to hold talks. Jake Sullivan there, the US National Security Advisor on CNN over the weekend. Mr. Sullivan will be sitting down with his Chinese counterpart later today in Rome. From New York City this morning, good morning. Futures up almost 1% on the S&P. On the NASDAQ, up 0.7%. What a turnaround in this bond market. Back through 2%, almost through 2.1% on 10s. Up 9 basis points today. Your 10-year Treasury, 2.08%. And look out, bunds. 10 days ago, the yield on a German 10-year was negative almost 7 basis points. It's now positive 35. On the session, Tom, up 10 basis points.
Well, it'll be interesting to see, John, and what I would suggest is you've really got to look at these new wider ranges we're in, like oil coming down is sort of mid-range right now and still nicely above any kind of technical support. And, you know, the technicals here are blown up for everyone. John, can we quickly comment on the real yield and the volatility? They're negative 0.89% as we go into Fed Day.
And Tom, we always talk about these cross currents. We need to talk about China too. Shenzhen locking down. This was meant to be the year the supply chains started to get back to where they were before. Yeah. And we were meant to have this synchronized global growth story. There is nothing synchronized about what is taking place around the world at the moment.
I had a lengthy phone call with Shanghai this weekend, and I can assure you they are constrained. The city is clearly constrained. There's no question about that in that reporting of the moment. Futures up 41. Right now on the technical construction in mid-war, Christopher Verone joins us, head of technical and macro strategy. He is at Strategas, a Baird company, and far more. He and I agree the trend is something of value. Christopher Verone, how do you do trend analysis in the time of a war?
Well, I think what you see, whether it's really any type of geopolitical event or even exogenous time like we had during the COVID days, is that the news really doesn't change the trend very much. Anything, it exaggerates what's already playing out. And, you know, we went into this over the last several months with growth versus value already topping, with bond yields already in an uptrend, with the market deteriorating internally for months and months preceding this. So I'm not sure Russia-Ukraine has done much to change what the trends under the surface already were.
Do you know where support is on the Standard & Poor's 500? Is it identifiable given the new volatility, the VIX solidly above 30?
Well, Tom, I would think about it the other way, right? In downtrends, we don't care much about support. We care about where's resistance. Right? This is the first time in 2 years we have to worry about what's on top of us. For 2 years, this market had nothing in front of it. So I think you have to flip that question and say, okay, on any oversold bounce, on any rally, where do we start to get concerned? Or where do we want to take chips off the table? And I think that's somewhere in the 44.50 to 45.50 zone where I would be looking to fade strength. On the other side, the long-term support somewhere in the 37.50 range, but it's about resistance when you're in a downtrend.
Chris, are you saying that the trend of buying the dip is over?
I think at least in relative terms, when you look at the type of stocks that have driven much of the last 7, 8, 9, 10 years, they're no longer the relative leaders of this market. One of the relationships that we've looked at extensively is the triple Qs versus the S&P, and that ratio topped. But that ratio topped before anything exogenous was going on. That started to peak 12, 15 months ago. So I don't think that a lot has changed over the last several months. This has been a move away from growth. This has been a move into value. We think rates are driving that, and I don't think Russia-Ukraine has changed that at all.
All right, so rates are driving that. So is this a bet that's being priced into the market that the Fed is going to tighten to the degree where it does hamper growth, or is it a bet that growth is slowing and that rates are rising in the face of what's going on with inflation, and the Fed really has very little to do with this?
Well, Lisa, let's think about it this way. This is the first equity market correction in the QE era, so over the last 13 years, where bond yields have gone up, not down. This is the first equity correction in the QE era where the yen has weakened, not strengthened, right? So regime change has been a very important theme in our work. We see it in the macro, we see it in bonds, we see it in currencies. As far as 10-year yields go, I mean, a week ago, if we were having this conversation, they were trading 166 last Monday. They're trading 210 today. German 10s at new highs. This is a very consequential moment for the bond market as we start a tightening cycle. You do not want to see bond yields peak at the beginning of a tightening cycle. It would be unprecedented. Bond yields tend to peak at the earliest midway through a cycle. So if you're looking for a recession signal, you do not want to see yield peak here. If we're sitting here a week from now or a month from now or 2 months from now and 10-year yields are right back to 166, that is a bad message for the economy.
Well, everything you're saying right now, Chris, is just the Fed that's late, right?
I think absolutely, and I think that's been the message of the tape here. And you kind of go back to this story of how bond yields have responded post-Volcker and pre-Volcker, right? Pre-Volcker, it was high bond yields that would often cause recession. Post-Volcker, bond yields tended to fall before recession. So I think we kind of got to make a judgment here of what exactly is the message of this bond market. The move, I think, John, you mentioned it this morning, the move in German 10-year yields over the last week is absolutely astounding.
Gets your attention, that's for sure. Chris, wonderful to catch up, buddy, as always. Chris Verone there, a strategist. The Bramo column out over the weekend on Bloomberg Opinion. And Lisa, the title of this, the Fed expectations don't add up in the debt market.
Well, it just is confusing to me that people are expecting 7 rate hikes or at least more than 6 rate hikes this year. And they're expecting that things are going to remain, yes, perhaps roiled. Yes, we've seen a correction, but that we basically have seen the worst of it, that there still are people trying to come in and buy the dip. I'm just struggling with that because either the Fed is not going to be effective in tightening financial conditions further, or we are going to have to see inflation roll over. I mean, something has got to give, and either has to be growth or it has to be the inflation outlook.
There is another central bank decision this week. In fact, there's a few. There's one from Russia too, for March 18th. The Bank of Russia, Tom, just confirming we will hear from the governor of the Russian central bank. She will make a statement on March 18th. Just seeing that headline across the Bloomberg right now.
Yeah, in an influential New Yorker magazine article this weekend, high marks were given to the monetary types of Russia. That maybe that's the one part of the Russian model over the last number of years it's actually worked, as they, obviously with higher oil prices, do better. John, I'm going to go with Bruce Kasman this morning. We're derailed, not dented. We're going to keep moving forward because it is the depth of the American economy.
We move forward to a Fed decision just 2 days away this Wednesday, with futures up almost 1% on the S&P and yields higher by 10 basis points in Germany, by 10 basis points stateside. Your Treasury, 2.09% from New York. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Lower earnings, a lower price. The message from David Kostin and the team at Goldman Sachs as they dropped their forecast from 4,900 down to 47. This morning, we have a bounce, up 0.9% on S&P 500 futures. On the Nasdaq, up about 0.75%. Risk appetite building. We keep emphasizing the difference between words and action. Every time we have hopes for a diplomatic breakthrough, the action on the ground speaks to a very, very different story. With equities looking like this, you can guess where crude is. Switch up the board, crude is lower on WTI and on Brent as well. Brent crude right now, 108.05 and down by a little more than 4%. This cannot just be about Ukraine and Russia. We have to talk about China too. Shenzhen locking down. And Lisa, the idea that economic growth in China is very much heading in the wrong direction now.
Yeah, well, we actually heard from strategists overnight downgrading China's growth expectations and upgrading the chances of an additional rate cut in response to this new lockdown. My question, how long can they persist with the zero COVID policy, given the fact that it seems like, frankly, the pandemic is getting that much worse and they're really struggling to contain it?
The divergence between policy in China and here in the United States is clear for all. If we get a move from China in that direction, the Federal Reserve is very much expected to go in the other direction. Switch up the board and look at treasuries going into Wednesday. On a 2-year yield, we are north of 180. 182.81, up 8 basis points on the day. On a 10-year yield right now, up 10 basis points to almost 2.1%. And Citi looking for 25 basis points on Wednesday, Tom, and looking for a chairman to potentially leave the door open for a 50 basis point move in May. A lift in the dot plot expected, a drop in the growth forecast, and a lift in the inflation forecast, a la ECB last week, expected from the Fed
and John,
in 2 days' time.
This is a reset on the terminal value. JP Morgan had a paragraph on this weekend as well. What's important, keep that screen up on radio. These are the higher yields that John is showing right now. John, we have higher yields, but without much curve steepening. That's significant.
What will be interesting this Wednesday, Tom, and you touched on it, when does this rate cycle end? What's the peak?
Well, they're resetting to a higher terminal.
Yeah. Or closer to 2?
Exactly, closer to 3. They're resetting to a higher terminal value, which is out there somewhere. There was a Linda Ronstadt song on that years ago. This is a great joy. In studio with us is someone with a rarity of rares within England, which is what I call the triangle. Degrees from Cambridge, Oxford, and the London School of Economics. Elsa Lignos with her service to Europe and her Britain, global head of foreign exchange strategy at RBC. Thrilled to have you in studio today. Euro came at 116, gyrations down to 85, gyrations up that Germany didn't like as well. Where is fair value on euro, war or no war?
It's a great question because actually when we updated our forecasts following the invasion of Ukraine, we didn't really change them. We kind of nudged the short-term mark-to-market but left the year-end forecast unchanged because a lot of what I thought was going to drive euro-dollar this year is actually playing out. What John just mentioned around, resetting terminal value for the Fed. It's that difference in policy.
And folks, we're talking to someone here with physics and economics, so we're going to go all x-axis on you, even though we usually don't do that on Monday. The terminal value is not only about the magnitude of the value, it's about the when of it, out the x-axis. Do we extend our view in war, or do we come in closer?
A great question, and not one I think which anybody can answer at the moment, not least of which policymakers. I think we've seen it both with the ECB last week and with Chairman Powell in his testimony. They're trying to maximize their optionality for that precise reason.
Also, we know that finance ministers are meeting in the Euro region in order to determine what the fiscal spending plan will be going forward, how to support the region. What's currently baked into the euro? How much fiscal support?
There's a little bit in there, but traditionally people have been a little bit skeptical that the Europeans will really deliver because of the opposition from the core, from Germany, the Netherlands, the more hawkish, fiscally hawkish countries. And yet, in this crisis, we've seen previously unthinkable things happen. So I wouldn't rule anything out, certainly not when you have the escalating situation between Russia and Ukraine.
All right, but if we do get some sort of fiscal response, do you expect some upside surprise to the euro? And I ask this because there seems to be a lot of bad news baked in, and this divergence between the U.S. and the euro region, and some people say it has a lot further to go to punish euro. However, if we do get this fiscal support, that could be a game changer. Do you agree?
Look, I think it's definitely a game changer in the yield space. From the currency point of view, this is not going to be an easy economic environment for Europe. And the kind of conditions under which we would get that big fiscal support would be the more extreme crisis conditions. You have to balance one against the other. So, don't get me wrong. We've definitely found opportunities to be tactically long euro. We were long euro sterling last week. It worked out very well. But as a core position, I'm not looking to get long euro, targeting the kind of 116s, 118s that a lot of people had at the start of the year.
Is this a euro story or is this a dollar story? And I ask this because the dollar has been the haven and continues to be amid this turmoil. Is that really what we're seeing and will continue to see going forward?
We have seen a lot of independent euro weakness, and last week was really a story of independent euro strength, more just short covering rather than some fundamental shift in outlook. So yes, the dollar has been acting as a haven, but there's been a lot of very specific euro weakness. Look at Euro CAD, Euro Aussie, Euro Kiwi. It's not just been about the dollar.
Tell me about the Pacific Rim. In turmoil today, COVID, the war, obviously Russia, China, and all. Just as a general measure, when you wake up in the morning and look at your three Bloombergs, how do you measure stress on the Pacific Rim? In the old days, dollar yen, it was a simple answer. I don't buy that anymore. What's the measurement we should use?
Yeah, dollar yen is going through an interesting transition moment. I think the Australian dollar for a lot of people is still that proxy for Chinese growth. And you can look at it against the US dollar. You can look at it against the euro. It depends what you're trying to measure. Are you trying to measure kind of Russia-Ukraine risks against what's going on in the Pacific Rim? Euro Aussie is a good way.
Okay, this is fascinating. Aussie renminbi, is it worth looking at for listeners and viewers, again, trying to get a Pacific Rim gauge?
So the renminbi is a tricky one only because it's manipulated. Yeah. It's not a kind of clean market.
So you go to yen proxy. Or do you go to Sing dollar? What do you use?
When you look at Sing dollar, another one which is managed, but the yen I think is actually more interesting than we give it credit for at the moment, because it comes back to something you guys were talking about earlier around regime change. And the fact is that depending on what happens to bonds and equities, the combination of the two, we could see dollar yen higher or we could see it quite a lot lower. And I don't think markets should be certain yet that dollar yen is just up.
What is your call on yen here? I mean, it's stunning. I mentioned David Malpass years ago at Bear Stearns, now at the World Bank, looking at 120 or even 130 weak yen, but that was a long time ago. What is the RBC call on yen?
I mean, we do have a call for dollar yen trading higher into the end of the year, towards 120. The fact is, though, there are a lot of downside risks there that make it very difficult to put on long-term positions in the yen. Clearly, if equities roll out of bed, you'll get yen going up against everything bar the US dollar.
I like that, John. Instead of saying plunge, we can say roll out of bed. I mean, it's
the same thing, Tom. Same thing. Astelinos, thank you. The global head of FX strategy at RBC, looking at some of the dynamics in this FX market this morning. The bond market gets my attention, so let's whip through it for you. On the 10-year Treasury yield, very close to 2.1% on a 10-year this morning. In Germany, up 10 basis points to about 34. And Lisa, I'm trying to work out what's unlocked the risk appetite this morning. Was it that one comment from the Chief of Staff of President Zelensky over the weekend? And I'll read that comment for you out on Twitter. It was literally this: I see the understanding and there is dialogue.
I don't know if this is really risk on. I don't know if that's a fair categorization of the move. I wonder how much what we're seeing in the bond space has to do with China and the idea that the supply chain disruptions from lockdowns will only further the inflationary output, and the idea that you're going to get even more inflation down the line. All of these inflationary inputs that were supposed to roll over and that were supposed to subside by the middle of the year are going in the opposite direction, whether it be oil or supply chains. And that, I think, is what you're seeing in the market right now.
I have to say, I'm looking at the global growth story as well.
Yeah.
Off the back of that story in China, Shenzhen locking down, the move in crude, Brent down by 5%. You can talk about its relationship with risk appetite. We can go there later, but look more broadly on metals. The metals story off the back of this, Tom. China locking down is a big issue. We see it in Shenzhen. Does it spread elsewhere?
I strongly agree, John. And, you know, the headlines are Foxconn and Apple. OMG, am I going to get my next marginal iPhone? I was suggesting more. That really doesn't matter. But on an inventory level, do we really know the stockpiles in China? And I would suggest, say, from China Beige Book, we don't.
I would agree with you, Tom. And looking forward for the Federal Reserve this Wednesday, when we get the forecast. Do you remember that line from Bill Dudley, the former New York Fed president, who just said the forecasts of the Fed were in fantasy land? Let's pick out a number, 2.7%. That's the PCE forecast for 2022 from the Federal Reserve, 2.7%. What does that get adjusted by?
Really well said, in the sense that J.P. Morgan, with a good team of people this weekend, went out to 5.x%, I believe 5.4%.
Lisa, I'd go to the dot plot too for 2024.
Yeah, how about those dots?
2.1%.
Why do we care? I mean, do we think that they actually are gaming out what they actually think? No, people care, but they care for a different reason than using that as absolute gospel. They are using that as a guide for what they seem to be targeting, what they seem to be foreseeing as manageable. So if it comes in substantially higher than that, you can come out and say, guys, it's not going according to your plans. You're getting it wrong again, so maybe you've got to adjust your plan.
Totally. Does anyone take the Fed forecast as gospel? No. It's about reaction function, intentions, and all of the above. And we're about to see a Federal Reserve that needs to lift that dot plot in a big way.
Did you see Janet Yellen come out last week and say that actually she thinks that inflation is going to be very uncomfortably high for 12 months at least? What happened to transitory? It's not even pretend transitory anymore.
Well, the politicians are rebranding the whole story, aren't they? Isn't it Putin's price hike now? Well, isn't that the story out of Washington, D.C., Tom, in the last week?
That's one story. I think a lot of people who I would consider pros aggressively push against that. Yes, there's some of that at the margin. And it's good to see wheat come in that, but I would say it's hugely fragile right now. John, I'm all over the dot plots. I'm looking for the TOTS dot plot here.
How did that go?
It's not going well.
It didn't go well, did it? Did you watch that game?
No, I did not watch that game.
Tell everyone why you didn't watch that game.
You have to have like 5 streaming. So I'm moving with Elsa Lingos. We're going to Europe where they have real TV.
I get a message from Tom over the weekend. It's on Peacock. I'm livid.
Yeah, it's like
I'm livid.
What
it's
do I
on
need?
Peacock.
5 streamers?
How much does Peacock cost, Tom? $5 a month, something like that?
Yeah,
it all adds up.
It's outrageous. It adds
Peacock,
up.
Paramount, ESPN Plus.
There used to be,
so instead he's going to go to Europe.
NBC, CBS, and Channel 38, so you could watch the Bruins.
Futures up 0.9%. That is a high-class problem, Tom.
It is.
Yields up 9 basis points on 10s, 2.08% from New York.
Glass of Tang.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia and Ukraine are holding another round of talks today. They come at a time when there are cautious hints of progress from both sides. The focus has been on securing a more substantial ceasefire. So far, there have only been brief pauses in the fighting to allow refugees to leave. And Russian prosecutors reportedly are threatening U.S. companies such as McDonald's, Yum, and IBM for criticizing the government or pulling out of the country. According to the Wall Street Journal, assets could be seized or corporate leaders could be arrested. The journal says prosecutors visited or called a broad range of companies to deliver their warnings. The British government is set to offer a new system for admitting refugees fleeing the war in Ukraine after several weeks of criticism. The new system includes payments to households accepting refugees. Cabinet member Michael Gove told the BBC he expects tens of thousands of Ukrainians will eventually be admitted. Russia has lost access to almost half of its reserves. Finance Minister Anton Siluanov told state television that the country has about $640 billion and about $300 billion can't be used because of asset freezes. He said Russia will repay debt in rubles until its cash pile is unfrozen. KKR has raised $17 billion for its biggest infrastructure fund ever. Investors could include sovereign wealth funds, insurers, and endowments. The fund will invest in North American and Western European countries. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Never asked for boots on the ground. But since we are fighting
fighting against one of the largest armies in the world, at least give us everything that we need, including planes. It's in the interest of all to supply Ukraine with literally everything that we need, because the future of Euro-Atlantic security is being decided here.
Dmytro Kuleba there, the Ukraine Minister of Foreign Affairs, going into the weekend, sitting down with Bloomberg's Anne-Marie. From New York City this morning, good morning. Futures shaping up as follows, up by 0.9% on the S&P, on the NASDAQ up 80, advancing 0.6%. Euro dollar almost back to 110, 109.61. That currency pair up 0.5%, and getting very close to 2.1% on tens. Your US 10-year yield just short of that at 2.08%, up 8 or 9 basis points on the day. Crude heading south, down by 4 or 5 percentage points to 105 and 104 and about 10 cents. Going into Wednesday, the Federal Reserve decision just around the corner. The call from Morgan Stanley, they adjust, Lisa. Brammer Ellen Zettner says this: after a 25 basis point hike at the March meeting, we see the Fed delivering an additional 5 20 basis point hikes this year, and then followed by 4 hikes in 23 to end the year at 2.625%.
That, to me, is a shocking prediction, especially because they also said they expect the start of quantitative tightening, not just the end of QE, but quantitative tightening in mid-May, which is equivalent to also, some people say, a certain number of rate hikes. How does the economy handle this at a time when, even with prognostications like that, we still see yields sub 2.1% on the 10-year?
So isn't the market already there? On the balance sheet, I don't know how to price the balance sheet. Hands up. And what are we talking about? 500 billion this year, $1 trillion this year? I've got no idea. But on rates, isn't the market already priced for this? So, are we back there? Twos are at 180.
Right. So a lot of people, they say, yes, the absolute level of rates are pricing this in. It seems pretty well priced into market. But has it priced in the slowing ramifications of this type of rate hiking that is sort of the main transmission mechanism of the Fed tightening? So if that isn't working, what does that say about the Fed's ability to actually combat inflation? And if it is working, are we accurately pricing in the slowdown that will ensue?
Tom, we mentioned this last week. I think this could be one of the toughest Fed meetings for this chairman, perhaps in his career. If you go back to the pandemic, it was pretty straightforward. The direction of travel was obvious. We need to go big. This time around, whenever you have to raise your inflation forecast and drop your growth forecast and tighten monetary policy, they're the kind of things that EM central banks are used to doing, not the Federal Reserve.
It's stagflation by any other name, and it's not within the theory book, that's for sure. What I would suggest, John, is that what is to watch is wage inflation. Wages are such a large part of the debate. It's underplayed by the media, and I'm sorry, right now, at least it's quiescent. If we were to see the wage gains that we're seeing in lower deciles of annual income, if that was to move out to the middle class, these would be very different Fed meetings.
I would agree with you, Tom. I'd agree with you. The Fed meeting, Tom, 2 days away. Let's get to Bloomberg's Anne-Marie this morning and head down to Washington, D.C. Anne-Marie, we heard from the Ukrainian foreign minister when you sat down with him on Friday. What is the big ask coming into this week?
Well, from Ukraine, the big ask was always going to be twofold. One, military support, which the United States has upped their support economically, militarily, in terms of the dollar amount, $13 billion. The president's due to sign that off. But, Jonathan, also, the Ukrainians want more sanctions. And when I spoke to Dmytro Kuleba on Friday, really 2 things stand out. One is that he wants 0 loopholes when it comes to companies that are halting their or cutting their ties with Russia, but potentially there could be some loopholes around maybe keeping some operations open within the country. And then also, he wants Western countries to ban any Russian vessel from entering a port. So that speaks to me really going after a little bit more directly the oil trade.
Well, closing the loopholes, Anne-Marie, I think of one big one, the possibility that Russia continues to get support from China, and there was that reporting over the weekend that that's exactly what they're asking for. What kind of discussions are there in terms of clamping down on China, pressuring China not to give aid to Russia?
So National Security Advisor Jake Sullivan, he'll be having this meeting one-on-one with Zhang Chuhi in Rome today, but he signaled on the Sunday shows over the weekend that there's already been a lot of pressure privately put on Beijing, making it very clear that if they usurped Western sanctions and still continue to give aid to Russia, they will be in the crossfires of these Western nations. Also, Gina Raimondo, the United States Secretary, talking about the fact that she's putting these Chinese chip companies on alert, that they as well need to make sure they're abiding by the Western sanctions regimes. But all of this comes as we know Russia is looking to China for more support when it comes to the military. And that is going to be obviously the main point that we're going to be focusing on today out of that meeting with Jake Sullivan.
Anne-Marie, what I learned in the weekend in reading Robert Service and Angela Stent, but also terrific work by the New Yorker, by the Financial Times, and by Mikhail Zyger in the New York Times, is the absolute loneliness of Vladimir Putin. You know him, you've been there. How lonely is lonely for this guy?
Well, I think he's increasingly getting lonelier. It's a very good point, Tom. His inner circle seems to be getting smaller and smaller. He surrounds himself really with only FSB, which is formerly the KGB security apparatus. And every day there's a new oligarch or someone from the elite tycoon world coming out and really bashing what Moscow is doing in response to these sanctions, and as well as calling for peace. Now, they're not directly criticizing Vladimir Putin, but you do see this uncomfortableness surrounding this Moscow elite and the place they are left in given the sanctions. That's only within Russia. Internationally, he's looking ever more isolated. And really his only friend, and this comes down to that February 4th decree they signed, is Xi Jinping. And they said that their relationship has, quote, no limits. This is right now a massive test for that relationship.
Anne-Marie, down in Washington. Anne-Marie, thank you. Just getting a call from Morgan Stanley, Tom. Chevron, Occidental, downgraded to equal weight from overweight. The team over there, still bullish on the energy sector, saying this: those two names have outperformed their peers and now offer less attractive relative valuations. The quote, more broadly, Tom, while the near-term outlook will likely remain volatile around Russia-Ukraine uncertainty, valuations across the sector broadly remain compelling. Think about the performance of that industry group year to date, Tom, on the S&P, up close to 40%.
Occidental Petroleum, in the last 18 months, John, up 542%.
Yeah, not bad. Not bad, is it?
I remember when their CEO walked in our building here with the Brunswick Group. I greeted some of the people, Matt Levine and the group at Brunswick, Nick Dagan and all, and they were flat on their back. They'd done Anadarko to huge criticism. I won't mince words about that. And they were flat on their back. Now, granted, they got some macro trends here that helped out. I would say that Warren Buffett, I believe, over the weekend, verbaled that he still likes Occidental. I don't have that in front of me, but I'm guessing that John up 542%. That's when Bramo put in her buy ticket.
Before it went up somewhat after?
No, when the oil cans were in her living room.
Are you accusing me of something?
You got long in spring 2020, and it was a great trade because you're a genius. Futures up 0.9%. The S&P. There's no fighting.
542.
This is
Triple
Bloomberg.
leverage cash looks good.
Oh, dear.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Sydney. In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
story.
How are
you thinking about those dynamics?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Inflation has really been dragging down Americans' perceptions.
We do need households to eat into what is a large reservoir of excess savings to make it through this.
We have some buffers to eat through before the risk of a recession becomes real.
The market's actually been relatively well behaved.
You know, look, in the equity options market, things are still business as usual.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up 1% on the S&P. TK, big week coming up.
Big week coming up. The Fed meeting on Wednesday. We'll have full coverage. We'll have our soiree in the afternoon. But, John, it all, to me, wraps around the next step in this war. What's fascinating to me, John, is on the war front, Maria Tadeo will give us perspective there. What is next? Do we see Russia Syriaizing the cities? That's, you know, with bombardment, et cetera. But far more, John, is the embedding of sanctions. That, to me, is the great unknown this week.
And, Tom, on all those fronts, China's role in all of it, as Jake Sullivan, the National Security Advisor, sits down with China's top diplomat today.
And I'm going to go back to Damian Sassower on Friday, who was absolutely lights out brilliant. I hope he's not watching now. And Damian said flat out, Russia's going to default this Wednesday. And when you do that, John, you got to go to your best friend, and his best friend is in Beijing.
His best friend has his own problems. Lisa, 17.5 million residents in Shenzhen locked down.
And a lot of factories that are very relevant to the rest of the world. The idea that they still are trying to do zero COVID at a time when the Omicron variant is going rampant through Hong Kong, and you're seeing outbreaks in another number of Chinese cities. How much does this slow global growth, and how much does this push inflation that much higher by interrupting some of the supply chains that already haven't been working normally?
And Lisa, the policy shift we'll see out of China compared to what we see from the Federal Reserve this Wednesday.
Does this give them an excuse to cut rates further? And if so, does that give an extra boost? It's such a complicated issue. I mean, honestly, whether this actually will end up giving a boost because they'll end up easing policy more on the fiscal front and the monetary policy front, or whether it will actually deteriorate global growth on the margins because they aren't being as active. negative.
We got some big moves in this market this morning. Good morning to you. Futures up by almost 1% on the S&P 500. Futures advance on the Nasdaq 100 up 81, up 0.6%. And here's your move in the bond market. 2.1% on the horizon on a 10-year yield. 2.07% right now, up 8 basis points. Lookout twos. Tom Keene, 181. On a 2-year yield this morning.
Said this last hour, John, it's not only the elevation in yields, but it's the curve that's out there. It's important to me that 2s10s is not out at 28 or 30 basis points and at 26. We've had some curve steepening, but it's ever so slightly as we search for the terminal rate.
A break of 104 on crude, 103.75, down by more than 5%. Lisa, yields on treasuries, 2022 highs.
Yeah, 2022 highs, which is potentially a problem if this is the peak. And we're beginning the slowing cycle. Picking up, though, on the crude story, how much is this optimism that talks will actually be successful between the Ukrainians and Russia? At 7:30 a.m., we do hear from the Ukraine Minister of Foreign Affairs, Dmitry Kuleba. He's holding a news conference in Kyiv, in Ukraine, to talk about what comes next with respect to talks, how things are going on the ground. How much do we hear more optimism, and how much could that potentially shape the market ahead? Today, we also hear from U.S. National Secretary Advisor Jake Sullivan. He'll be meeting with his Chinese counterpart, Yang Jiechi, the Politburo diplomat who is in charge of foreign diplomacy. They'll be meeting in Rome. How much does the U.S. pressure China to try to come to the table and cut off Russia, considering the fact that they still seem to be aligned? And today, European finance ministers are meeting to discuss the fiscal policy coordination for 2023 at a time when this expectation of possibly tightening, of inflation, has already sent yields incredibly high relative to where they were. I mean, incredibly high, meaning somewhat positive, at least at the longer end. If you take a look at how much debt has negative yields, it has dropped to about $4 trillion from as high as, $17 trillion not that long ago. How much have we seen a changed landscape as they now start to think about borrowing money to support the European economy?
Elisa, just quickly a comment on the turnaround we've seen in Europe. 10 days ago, we had a negative German 10-year yield, now positive about 35 basis points. In just 10 days, a massive turnaround post-ECB last Thursday.
There was speculation that the ECB would stay on hold for longer to try to allow the European economy to recover. That function, that reaction function, seems to be dead because inflation is calling the central bankers' hands. Basically, how can they stay on hold with inflation running at the fastest pace in decades and with further inflation stemming from this conflict? And that is what we heard from the ECB, John.
We saw this from the ECB. Inflation forecasts up, growth forecast down, and we're expected to see the same thing from the Federal Reserve this Wednesday. So what does it mean for strategists, Tom? Goldman lower their earnings on lower prices. A revised year-end 22 S&P 500 target of 4,700, 10% upside from today. Previous target 4,900. I say lower earnings, lower price, not lower prices. You get where I'm going with this? Because they say, Tom, calm down. A surge in commodity prices and a weaker outlook for U.S. and global economic growth lead us to lower our EPS estimates.
Yeah, I agree, John, but I think it's completely normal given the shock that we've all been through the last 3, 4, 5 weeks that we're seeing these adjustments down. We can go back up just as fast if the air clears.
What do you need to see? What would you need to see, Tom? Do you not think we've seen a sufficient enough growth hit to actually have a sustainable lower trajectory?
I'm listening to
the
pros.
This year?
Bruce Kasman and J.P. Morgan in their weekly note was adamant this has not been derailed. The gloom is feasible, but not certain. I don't want to go to a woe is me, the world's going to end view when I've got a lot of pros trying to map out the probability that we can sustain through this or actually improve with some form of end of this war.
There has certainly been a reset this spring, Lisa, in a bigger way. I mean, 3 months, the change in 2-3 months has been pretty stark.
Transitory is dead. Right now we're dealing with inflationary inputs that have not gone away. We're dealing with a Fed, an ECB that has to face off with the potential risk of stagflation, which is basically the central banking nightmare, John.
Tom's fired up this morning, isn't he?
He's always fired up. He gives him some tang, let him go.
This morning in a bigger way.
I did a lot of reading this weekend, John,
I'm
the
sure you
summary
did.
of it is Putin's loneliness. That was really the message, article after article, book after book, this reading.
Let's cover that now with Bloomberg's Anne-Marie at the White House down in Washington, D.C. Anne-Marie, speak to Vladimir Putin's loneliness.
Well, he's incredibly lonely on the international stage. We know that, especially when it comes to the West. And his one friend, and that's going to be really the topic to discuss today, and the hot button issue is, of course, Beijing. And where does Beijing potentially move a little bit of the weight of the pendulum? Is it towards Moscow or Kiev? And this comes after reporting over the weekend that U.S. officials say that Russia has asked Beijing for military assistance. The issue China has, if they were to do this, that would be escalating where they are or getting rid of that projection they want, or that veneer they have of neutrality. This is something that they have wanted to maintain. They haven't come down and criticized or condemned Russia directly, but at the same time, they haven't exactly ran to the help of the Ukrainians. So they are put in this very difficult position, and that is what Jake Sullivan is going to be discussing today when he is in Rome, sitting down with his with the top Chinese diplomat.
And Marie, what are the additional steps? We heard late last week, that the U.S. was going to sanction seafood from Russia as well as alcohol. What's next? I mean, are they basically just looking for small items to sanction that aren't that big economic revenue-wise, but that basically are symbolic in terms of how hard they're going?
So in the United States, we do have the president talked about getting rid of Russia's neutral or normal trade relations with the WTO, but that needs congressional support. So this week, Congress will be focusing on that. And then when you look at what Europe is doing, potentially some export bans on some top item cars that are over 50,000 euros. So you think of BMW, Mercedes, and the likes. This would be, as you say, Lisa, probably a little bit more attempts from the West at finding any sort of avenues to just continue ratcheting up that pressure. And the idea here is really to try to target the Russian elite that potentially the West thinks still has a little bit of impact on President Vladimir Putin. But we do know that Putin is very much so isolated and really only listening to a small group of people, and that is within the security apparatus.
And Marie, in the new social media of a new war, and with the intelligence dump that we've seen from President Biden in the White House, so original, it really just comes down to what's out there. And what's out there are all sorts of war and military specialists going right down to the actual bullets the Ukrainians are using. One of those bullets is a NATO ammunition, 5.56 times 45 millimeter ammunition, whatever that is. Anne-Marie, is that the stuff that we're sending to Ukraine? Do you have any confidence that we're doing that?
Well, there has been a lot of military aid sent to Ukraine. The big issue right now is whether or not they are going to get those fighter jets. And you do hear Ukrainians, one, ask for those Polish fighter jets, but the issue you have with NATO countries is they don't want to be the final hand to touch those fighter jets or to dispatch from their potential base, the United States especially, because Russia would view this as an escalation and a provocation, and potentially would view as NATO getting involved in the conflict. We should note the other issue the Ukrainians continue to push, and we just heard from Dmytro Kuleba out on Twitter talking about it, is closing the skies. They are criticizing the West of saying, quote unquote, you don't want to get involved in World War III, but saying that you are threatening or risking that potential that Russia is going to come to your doorstep as well. And over the weekend, Russians came very close to the Polish-Ukrainian border.
Anne-Marie, thank you. Down in D.C., much more on that story, of course, throughout the day on Bloomberg TV and radio as well. On lighter news, over the weekend on Saturday, Tom's team lost to Manchester United 3-2. Manchester United's Cristiano Ronaldo scored 3 goals in that game, and in the crowd, a certain Tom Brady. After that game, this happened, Tom. Cristiano Ronaldo on the pitch with Tom Brady. Ronaldo asking Tom Brady, you're finished, right? And then, Tom, you just get this grimace of gritted teeth. I don't think so. Then 3 hours later, Mr. Brady announces one more season. TK, did Agent Cristiano get it done over the weekend?
I think Roger Goodell called him up and said, let's go. You're the only one that's going to do this. He's extraordinary. I can't say enough about how original, for our international audience, original the Brady career is.
You know, when you've got something left in the tank, it is so hard to step away from a sport you've still got something to give to. From New York City this morning, good morning. Futures up 0.7%, off session highs. This is Bloomberg.
Keeping
you up to date with news from around the world with the first word. I'm Ritika Gupta. The US and China will hold the first high-level in-person talk since Russia's invasion of Ukraine. National Security Advisor Jake Sullivan is meeting today in Rome with China's top diplomat, Communist Party Politburo member Yang Jiechi. The Biden administration wants Beijing to use its influence on Russia to end the war. The US says Russia has asked China for military assistance for its war in Ukraine. It's an unusual request that suggests Vladimir Putin has faced more setbacks in the invasion than he imagined. The US isn't saying what kind of equipment Moscow has requested. China calls the US statement disinformation. North Korea may test an ICBM as soon as this week. That's according to South Korea's Yonhap news agency. A report says South Korea and the US have detected signs of an imminent test of an intercontinental ballistic missile. North Korea hasn't launched an ICBM since 2017. And China has placed the 17.5 million people of the city of Shenzhen into lockdown for at least a week. They've been told to stay home and will undergo 3 rounds of coronavirus tests. That came after virus cases nationwide doubled to nearly 3,400. Apple supplier Foxconn is halting production at its Shenzhen sites, one of which makes iPhones. And in sports, pro football star Tom Brady has changed his mind and is not retiring after all. Brady will return for a 23rd season in the National Football League. The Tampa Bay quarterback says he realized his place is still on the field and not in the stands. Global News 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focus on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
We saw Russia and China come closer together, and at the same time, we've seen China pretty uncomfortable with an invasion of a sovereign country. I think the PRC is watching very closely, has to make some tough decisions.
Wendy Sherman there, the Deputy Secretary of State on Fox over the weekend from New York City this morning. Good morning. Futures up 0.9% on the S&P. Let's call it 8 now. On the Nasdaq 100, up 0.5%. This move this morning fades a bit in the Treasury market too, up 8 basis points to 2.07%. Crude back down to 103 and threatening to take a look at 102, 103 and 5 cents. We're negative there, almost 6 percentage points this morning. This just in, Tom, from John Stolfus over at Oppenheimer, quote, right on, Tom, with the thought that it's too soon in the year to call the ball game in terms of how things will unfold this year. TK, you and him are on the same page.
Well, John does acute work. This is OPCO, Oppenheimer and Company, the great company of Myron Picot, who really helped me early on. And John does very careful work based on fundamentals, and the fundamentals are the resiliency of the American economy, to be honest, across the Atlantic from this ugliness in Ukraine. But also, we really don't know what's going to happen on a geopolitical, from a geopolitical standpoint. John, the uncertainty is immense both ways right now.
Oh, the visibility for 22, I think it's fair to say, Tom, exceptionally
What's
low.
the visibility for April? Help me.
Hey, get me to the end of the week, Tom.
Yeah,
that's the difficulty we've got.
John, a very important headline, Germany creating task force to ensure Russia sanctions work. That's exactly what I was talking about earlier. The embedding of sanctions this week is a critical theme.
Do you think they're done on the sanctions, Tom? Are there more to come, particularly in Europe?
When you're doing missile attacks X kilometers from Poland, no, I don't think they're
15
done.
kilometers, Tom. 15 kilometers.
We'll have to see. Let's do this because of time. Philip Orlando with us. Chief Equity Market Strategist. Federated Hermes doesn't give perspective to the decades of experience. Phil, I absolutely love, buried in your note, January, February, April. There's something about the window of getting out of winter, the April of Phil Orlando, that's important. Can you be optimistic on April American spending, given the slowdown we saw in February?
So we had a terrific January. There's no question about that, as consumers went out and redeemed all their gift cards. February tends to be a shoulder month. People sort of right-size their budgets and hunker down. And you've got the impact of inflation and energy costs and the war in Russia and all of that. But as we get into March and April, we're hoping that as you know, the spring, the swallows return to Capistrano, people start to spend money again. So we'll have to see. Obviously, there's a giant wild card out there, and that's Russia.
Right.
But we're optimistic.
John, we had a jargon alert there with Mr. Orlando. He said, right size your budget. What that means is pay taxes, just in case anybody really wanted to know what that phrase meant. Phil, in the equity markets, when you talk to the great people at Federated and what you people do in blue chips, how do you approach a stock market here in crisis?
So we're bracing for a lot of volatility this year because of the spike in inflation, because of what we felt was going to be a dramatic hawkish turn in Fed policy. The wild card, we did not expect a Russian invasion of Ukraine. That complicates the situation. We are overweight stocks still, but with that overweight dedicated to domestic large and small cap value stocks and international stocks that are cheaper, have lower betas, have higher dividend yields. We are underweight the growth and technology names.
Phil, you're still overweight in an international level. Is that Europe? Are you still overweight in Europe?
We are still overweight in Europe, and we think that Europe has significantly discounted a lot of the risks and the problems that are there. Now, your follow-up question is, well, there's still a lot of uncertainty in terms of energy security, and that's absolutely right. But to a significant degree, we think the market has priced a lot of that in, and we're trying to take a longer-term view. We're trying to say, all right, a year from now, we think this Russia situation will be resolved behind us. We'll have a better sense of what's going on with the Federal Reserve. We think inflation will have peaked by the middle of this year and start a long slide back to normalization that may take, 2 years or so. But as we're looking out over the course of the year, purchasing Europe on an oversold spike down here isn't a bad trade for us, again, with a longer-term viewpoint.
Phil, my follow-up question was actually, are you buying the banks right now, considering how far they've been beaten up over in Europe?
Our European team actually likes the banks. They recognize the risks, but there are some pretty good values there.
There always is, isn't there, Phil? There's always value in European banks, isn't there? Why isn't this a value trap?
Well, it certainly could be because of the uncertainty of what's going on with the Russia-Ukraine situation. The way we're looking at Putin is that we're looking at a wounded, cornered animal here that thinks when all of this is done, he can stroll into the United Nations and make a speech or join a G20 meeting or give a talk at Davos. And I don't think he understands what a pariah he's turned his country into and what the global economic ripples are associated with that. And we don't know if this ends peacefully tomorrow or if we end up with a nuclear holocaust next week. And that uncertainty creates pause for all of us.
It's a wide range of outcomes, that's for sure. Phil, good to catch up, buddy, as always. Phil Orlando there at Federated. Tom, how many times have we heard people over the last decade say there is value in European banks? You lost count.
Yeah, I've lost count as well. David Harrow's doing the counting for us with the challenges he's had with BNP Paribas and Credit Suisse. John, I'm going to go back to growth. I mentioned this last week. Somebody said, why you mention the arch-liberal Joe Stiglitz of Columbia with growth? Stiglitz did phenomenal work on the small g in economics, the growth rate over the years. And the growth rate dynamics in Europe, John, are starkly different from the United States.
I mentioned a couple of times this morning that we were set to hear from President Zelensky, Tom, just getting some reporting from CNN. President Zelensky has informed the Council of Europe that he is now unable to address them given urgent matters in Ukraine. The Ukrainian Prime Minister will address the Council instead later today. So that's coming out of CNN on Ukraine. I understand, Lisa, we hear from the Foreign Minister still?
Yep.
Perhaps in about 5 minutes?
That's the understanding, and perhaps we get some sense he's going to be holding a press conference of any possible developments when it comes to some of those negotiations. There was a more optimistic tone out of the Ukrainians over the weekend on negotiations, which possibly is why there is somewhat of a risk-on feel in certain areas. Hope a little bit.
To be clear, these are scheduled times. This is a country, a government, fighting a war, and these times are going to move around. They're going to move around a lot in the coming hours, I'm sure. Futures up 0.6% on the S&P, on the Nasdaq up 0.25. This rally this morning fades and fades a little bit more. Crude 103.65.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Equity futures and that rally, that pop a few hours ago, it fades. Futures up 0.5% on the S&P. We are negative on the Nasdaq, down 0.1%. TK, the headlines rolling in from the Kremlin this morning.
They're coming in from the Kremlin. It's a set of headlines, John, and they really bring up to date their feel. They talk about China, and they say they're not really talking with China. There's a set of other headlines. But what it means, John, is the market moves. I go right to the German 2-year, and yes, it comes in. It hasn't given up half the good news of the morning, but almost half.
Lisa, one, they deny requesting military aid from China, and two, they're looking to realize their objectives in Ukraine on schedule, whatever that means, and they're still calling this a, quote, operation.
Yeah, and saying that Russia has all the resources needed to complete the Ukrainian action. But this idea that it's on schedule, that it will realize all of their goals, and the careful wording, didn't request China military aid, does not say they didn't request other aid or they haven't had other discussions, but also how much do we trust any of the utterances out of the Kremlin? For
a country that repeatedly denied any plan to invade the country, there's a schedule now? What is the schedule?
Well, and obviously definitely came far short of their expectations of how quickly Ukraine would fall. Is this their schedule?
So this market turns around, it falls. We're negative on the Nasdaq, just about on the S&P. We're positive 0.5%. We were up more than 1% early this morning. Goldman, we've talked about their call a couple of times. Their year-end price target now 4,700. Still implies 10% upside from where we were at the close on Friday. Switch to the board and get to the commodity market. Drum roll. Crude. 107.46 on Brent, down 4.62%. This is not just about the story between Russia and Ukraine. Lisa, you've got to believe this is about China and city after city locking down. The population of Shenzhen, we're talking about almost 20 million people here, Lisa. These are huge numbers.
Going into spontaneous lockdown that was not expected. It's a 1-week lockdown with an uncertain recovery date in terms of when they come back and start recirculating. But all of the factories, this is still the factory of the world at a time when we were hoping for supply chains to get restored.
So we reset in spring of this year, and the inflation story, stickier. For the Federal Reserve, they've got to do something the ECB did on Thursday. They've got to cut the growth forecasts and lift up the inflation forecast and talk about tightening monetary policy as well. That is really, really difficult. Finish on the bond market, 2s, 10s and 30s. TK yields the highest since 2019. 2s through 180, 10s approaching 2.1%.
The yield structure into the Fed meeting. And again, this is a Fed meeting that's going to have to adapt to the news flow today and tomorrow. It's a long way to Wednesday, John.
2 days away, and it feels like a lifetime away, TK. That's the cross-asset price action. Let's get you some single names and say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Let's stay in China here. A lot of the Chinese U.S.-listed Chinese companies here in the U.S. lower in the pre-market. Remember, we had a pretty brutal sell-off last week, and looks like we're going to resume that here on the day. Alibaba Group down about 5%. Remember, this is coming off a stunning 29% drop that we've seen just over the past 4 weeks alone. Baidu down about 7% here in the pre-market. Pinduoduo as well. Remember, this sell-off started primarily because of concerns about economic stagflation over in China. Then, of course, we had those headlines a little bit earlier this morning about the Russia apparently asking China for some sort of assistance with regards to its military invasion of Ukraine. And now, of course, you were just reading the latest headlines out of the Kremlin denying that report. Nevertheless, the damage done. Apple shares down about 1% here on the shutdown of Shenzhen and another province over there in China because of the COVID crisis. Those shares down about 1%. Keep an eye on Apple as well as a lot of Apple's suppliers as well. Let's keep it going and see what else is moving here on the day. Flip up the board. Anyway, guys, back to you, Tom.
You're doing it great, Romain.
Am I doing it?
You flipped it up the board. Finish out with Las Vegas Sands right now, Romain.
Las Vegas Sands. We're just seeing a lot of weakness there, primarily, Tom, because of the concerns here about the crackdown on travel.
I brought that bill in today. He's running the boards, Romain. I'm sorry. It's a damn dog's fault. Romain, thank you so much. To close this afternoon, where you'll see the boards on time. This is a joy. Megan Green has put together a Princeton-Oxford academics of exceptionally thoughtful and transatlantic essays on economies. She now has to confront war. She is global chief economist at Kroll, but far more at the Chatham House and truly our transatlantic source. Megan Green, I want to discuss today Germany. And at the bottom, you go all Patrick O'Brien on me, Napoleonic Wars, and you say time is of the essence. What is the time is of the essence for the new German government?
Well, I think for the new German government, time is of the essence mostly applies to the policy mix that they're going to be applying to what's going on and with respect to the economy and also the conflict between Russia and Ukraine. And by that, I refer to the policy mix between fiscal and monetary policy. The ECB came out last week pretty hawkish, accelerating their tapering process so that they can start hiking rates. If they actually stop buying bonds, though, the ECB won't be able to reduce yields from creeping up, particularly in peripheral countries. At the same time, the EU is recognizing it needs to become a big spender on things like defense, subsidies for energy, the green transition. And so the EU is trying to come together and figure out some way to raise money for that. The time is really crucial, though, because the ECB will stop its asset purchases in the third quarter of this year. It could take that long for EU leaders to actually put together some kind of package so that the EU can reduce its energy dependence on Russia and other things. The nightmare scenario is that both sides fail, so the ECB stops buying bonds and the EU doesn't pull it together. And then Europe's really in a bind.
Are you optimistic they can go all Konrad Adenauer? At the beginning of the German post-World War II experiment, they didn't have a choice. They had to rebuild. Is that enthusiasm out there? Is there a Konrad Adenauer out there?
Well, there is enthusiasm for that, surely, but we just, of course, had the pandemic, and the EU came together and issued debt jointly to fund a response to the pandemic. I'd say that crisis was probably a bit more acute than this one. And so there is a question about whether they can do it this time. The new German government's coalition agreement forbids any more recovery funds. The German finance minister is pretty set against it. There are other frugal countries in Northern Europe that also aren't interested. So as always is the case with the EU, time will tell, and they'll probably do something at the very last minute. But in the past, the ECB has always had to be the one to step in and be the only game in town. And so that may well happen this time as well.
Of course, they don't have that much ammunition, Megan. So I do wonder whether a recessionary environment in Europe is not a given, but seems much more of a certainty to you.
I think stagflation is very likely in Europe. I'm not sure that they'll go into recession, but certainly a scenario where you've got virtually no growth across Europe and really high inflation. That's my base case scenario at this point. And that, of course, is the ECB's absolute worst nightmare. So in my view, you know, the Fed is tapering first and then will hike rates. The ECB has been intent on taking the same path. I think actually the ECB is making a big mistake and should have done it the other way around, played with rates while continuing to buy assets, because that's going to keep borrowing costs low so that European governments can borrow and spend in the very short term.
In the U.S., given the fact that there does seem to be a similar reliance on the Fed to try to equalize some of the inflation, how realistic is that? I mean, if the U.S. doesn't see stagflation, how concerned are you about other economic ramifications, particularly when it comes to inequality?
Well, so, I think the U.S. is further away from stagflation than Europe is. Our recovery is much further ahead. But, the Fed absolutely has to start hiking, if not for any other reason than it needs to maintain some credibility, keep inflation expectations grounded. In terms of inequality, actually, I think the Fed gets a worse rap than it probably should. The Fed's winding down its bond buying purchases program, so it's finishing tapering. But, and that has really boosted asset prices. But we don't know the alternative. If the Fed hadn't stepped in to make markets in March 2020, unemployment would be a whole lot higher, and that would have implications for inequality as well. So I think the role of central banks in driving inequality higher is more ambiguous than most economists really suggest. I think, we don't know what the alternative scenario might have been, but it would have been lower growth, and that might have been worse for low-income families.
Megan, you mentioned earlier Europeans, frugal countries. Is America a frugal country?
That's a great question. Our debt burden would suggest not really. We did spend really big in the pandemic. That's partly why we've seen broader-based inflation in the aftermath than, say, Europe, for example. That being said, it's become really difficult for Congress to pass any kind of fiscal spending package. And so the U.S. is getting more frugal than it was, certainly. But, I think I view it as us taking our foot off the accelerator a little bit rather than slamming on the brakes in terms of fiscal stimulus. I think we could still get more pieces of the Build Back Better legislation passed through Congress's kind of one-off pieces of legislation. So there might be a bit more spending ahead, but it will be, over 10 years and largely backloaded. So I think the brunt of the fiscal stimulus that the U.S. has to provide is probably behind us. What might come up now is support for Americans who are paying really high prices at the pump. So we might get some sort of alleviation given the spike in energy prices that we have seen and are bound to see going forward.
Looking for something similar out of Europe too. Megan, wonderful to catch up with you, especially on Europe and the United States. Megan Green there of the Kroll Institute. Futures up 0.4% on the S&P, the Nasdaq down about 0.1%. About 10 minutes ago, we got some headlines from the Kremlin. About 15 minutes ago from the Kremlin spokesman Peskov. They read as follows: Russia will realize all its plans in its Ukraine, quote, operation, the language the Russians have been using for what everyone else considers to be an invasion. Over the weekend, there were reports that the Russians had asked the Chinese for military aid, Russia coming out, Tom, and denying that, saying they did not request China military aid for this operation. They say Russia has the resources needed to complete Ukraine action and complete it on schedule, Tom.
To me, the headline's a non-starter in that for operation. I mean, okay, so China doesn't help with for operation. We've got to remember, Russia basically has a pretty good cash flow off present commodities. Now, that may change any day. I'm going to go back again, John, to what's important to me is Damian Sassower late last week just simply saying, look, a default is in order. That's a different moment for Mr. Putin.
2 interest payments due this week on $2 bonds. Lisa, hard to square the commentary, the communication we get from the Kremlin with what we heard over the weekend and these hopes about, again, another diplomatic breakthrough.
I would agree, especially because they're going to be paying the dollar bonds in what, rubles?
Apparently so. We'll get into that in a moment. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia and Ukraine are holding another round of talks today. They come at a time when there are cautious hints of progress from both sides. The focus has been on securing a more substantial ceasefire. So far, there have been only brief pauses in the fighting to allow refugees to leave. Russian prosecutors reportedly are threatening U.S. companies such as McDonald's, Yum, and IBM for criticizing the government or pulling out of the country. According to the Wall Street Journal, assets could be seized or corporate leaders could be arrested. The Journal says prosecutors visited or called a broad range of companies to deliver their warnings. And Russia has lost access to almost half of its reserves. Finance Minister Anton Suyanov told state television that the country is about $640 billion and about $300 billion can't be used because of asset freezes. He said Russia will repay debt in rubles until it has cash pile is unfrozen. And the British government is set to offer a new system for admitting refugees fleeing the war in Ukraine after several weeks of criticism. The new system includes payments to households accepting refugees. Cabinet Minister Michael Gove told the BBC he expects tens of thousands of Ukrainians will eventually be admitted. And Ford plans to roll out 7 all-electric vehicles in Europe by 2024. The automaker is also doubling its planned investment in a production site in Germany to $2 billion. The push is part of Ford's global plan to reach more than 2 million in EV sales. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
estimate that at 7.9%, we will probably get very close or above 10% before we come down. And that difference will be all because of the disruption that Putin's war implied for commodity prices, supply chains, and shipments.
What a call from Mohammed. 7.9% now and perhaps above 10% before year end. Mohammed Al-Arian speaking to CBS over the weekend. From New York this morning, good morning. Futures fade up now just 0.25% on the S&P. You can call it a third if you want to. We're down 1/3% on the NASDAQ 100. Moments ago, this line came out from the Kremlin, the spokesperson for Vladimir Putin.